are hitting the automakers.
It is, but then it's deeply exposed to what is a pullback in regulatory support for the future of, well, solar, of future of better batteries, the future of EVs. What's interesting for Tesla is in the next couple of quarters, maybe you'll see a pull forward of the EV credit that's going to be wiped out, $7,500. Well, that's only going to suit you until the end of September. So buy your Teslas now. So maybe we'll see a slight support to what has ultimately been a dire state for sales in the US, Europe, and beyond for Tesla. Remember, we got the delivery numbers for their fiscal second quarter. They were ugly. They were down 13%. But as you say, they do make the cars largely either over in China or in the United States. So from a tariff perspective, maybe they're not exposed, but I think more from a sentiment from the administration, a change on support from also getting credits. Remember, they get an awful lot of money because other car companies can't live up to what had been previously enforced environmental targets. And so they bought regulatory credits from Tesla. They're not going to be buying them anymore.
Caroline, we're looking forward to your coverage. Of course, the earnings season kicking off hot and heavy. Bloomberg Technologies, Caroline Hyde. Now back to General Motors. Earnings beat estimates, but the automaker says that U.S. tariffs added more than $1 billion in costs for the second quarter. Let's bring in Bloomberg's Detroit bureau chief, David Welch. What did you make of the numbers themselves, David, and the outlook that they had given?
They affirmed their outlook for the year, which was already based on the hit they were going to take from tariffs. Look, I think this quarter was one that really shows the full impact of tariffs on the auto business, because the mitigation efforts GM is taking, resourcing some parts from companies inside the U.S., cutting costs internally. They've moved some production already by slowing assembly lines in Mexico and Canada for pickup trucks and then speeding up the lines at a big plant in Indiana. But these are all things that kind of nip around the edges of it. There's really no way for GM to get back to pre-tariff profitability, and I think that's why the shares are down. And on the call with analysts, CFO Paul Jacobson made a couple mentions to the company's profitability if you backed out that tariff impact. So what he's saying is, hey, the business is still solid and strong, but in this new trade environment, we're just not as profitable as we used to be. And that's what investors are looking at. How does this company and other auto companies, how do they raise profitability when they've got this huge headwind, this huge tariff bill to wrestle with going forward?
Well, David, my understanding is that you take a look at pricing, and that's a lever that GM hasn't pulled to this point. You take a look at their average sticker cost, and it really hasn't risen at all. When you think about tariff mitigation efforts that GM could take in this environment, what about just raising the price of their cars?
Yeah, look, everyone's been saying that for the last, 9 months, ever since Trump started rattling the saber about tariffs. And, look, you can't view that in a vacuum. GM can go out and say they're going to raise the price of everything they make by $10,000 and consumers just won't buy them. And these are consumers who are already beset by very high interest rates and pretty close to record vehicle prices as it is. Some companies have sneaked in very small price increases, but consumers are kind of tapped out. That's why we're selling on a pace for 16 million vehicles, whereas a few years ago we used to be 17 million vehicles a year plus. Consumers just aren't biting on it. They'll keep their cars longer and repair them. They'll try to go to the used market. Anything to avoid what is now an average monthly payment of well over $700, with a record number of people paying over $1,000 a month. And when people are tapped out, the tariffs kind of go into your profitability because you can't pass the cost on.
David, we're so grateful for your time. That is David Welch of Bloomberg News. And of course, don't miss it. Later this hour, we're going to speak to General Motors Chief Financial Officer Paul Jacobson. We will talk to him about any potential for price increases, if you can get them, those tariff strategies. Let's see what else they've got going on. Some movers also on our radar. Coca-Cola sales beat estimates. Cane sugar is coming this fall. You still see them down. Speaking of expectations relative to reality, Katie.
Yeah, this is to appease President Trump. This will be U.S. cane sugar. I haven't really been following this controversy, but definitely caught some eyeballs this morning. Not really making a difference in the stock price, but how about Philip Morris? It actually raised its guidance on strong sales of Zyn. We know that has been very, very popular. Got a boost from the FDA recently as well, but the stock down about 6% right now, Shonali.
Yeah, organic sales trailed estimates, even as Zyn remains that trading floor favorite, Katie. I'm also watching CSX. You pointed this out this morning as well. Last night, it made a lot of headlines that report that BNSF is exploring a takeover of of a rival. Of course, CSX is considered to be potentially in that crossfire. Let's see how it goes. Railroad consolidation. I know we're going to talk about that more later in the hour.
Yeah, the sell side definitely catching that attention there. TD Cowen raising its price target and upgrading CSX, basically on the idea that it could be a consolidation target. We'll talk more about that, as Shanali said. But coming up, Treasury Secretary Scott Bessent calling for a review of the Fed's headquarters, but says that he sees no reason for Jerome Powell to step down right now. That conversation up next. This is Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
Do
the
we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
And now to high interest, a look at what's making headlines around the world. OpenAI and Oracle announcing a partnership to develop additional U.S. data center capacity to power AI workloads. OpenAI has not yet said where the sites will be located, but states including Texas, Michigan, Wisconsin, Wyoming are all under consideration. And Open Door Technologies is extending its gravity-defying rally from last week. Investors pile into the stock and found a sudden fandom among retail traders and social media platforms. Take a look, another 20% higher. Pre-market, analysts are comparing the moves to what we saw in the GameStop era in 2021, which you might remember very well. And paint maker Sherwin-Williams missing earnings estimates and cutting its profit forecast thanks to soft demand for paint products. The CEO expects softness to get worse in the second half of the year. Pretty interesting setup, Katie, as earnings season continues to forge on.
Absolutely. Watching companies try to navigate the geopolitical landscape and what trade policy is at this day is definitely something that we'll continue to watch. But let's head to D.C. right now because the Federal Reserve is hosting a conference day in Washington, providing updates on key regulatory capital framework. Fed Chair, geez Louise, Jerome Powell kicked off that conference.
We need to ensure that all the different pieces of the capital framework work together effectively. Doing so will help maintain a safe, sound, and efficient banking system for the benefit of the people we serve.
And for more, we're joined now by Stuart Paul of Bloomberg Economics. And Stuart, let's pull back the cover. Everyone just wants to know about what's going on between the president, the administration, and Jerome Powell. You had Scott Bessent on the wire this morning saying that he doesn't see a case for the Fed chair to step down at this moment, but I mean, we know which way the wind is blowing when it comes to the whims of this administration.
That's right. The administration very clearly wants lower interest rate policy. The administration very clearly wants the Federal Reserve to cut interest rates by 200 to 300 basis points. That's what we heard from the Fed chairman. And they're using other functions of the Federal Reserve, including its banking authorities, including other sort of like supervision requirements that it's imposed on the banks that it supervises, and including the renovations to the Federal Reserve's headquarters as some sort of red herring or cover to muscle or apply political pressure to the Fed to lower interest rates. But that's an ever-evolving set of circumstances. As you said just this morning, Scott Bessent was taking a step back and saying monetary policy, the monetary policy and interest rate setting function of the Federal Reserve should be sort of set aside in a jewel box. And I think that that's right. If you want to take shots at the Fed for spending too much on its renovations, fine, but that interest rate setting authority of the Fed should be set aside.
So speaking of the jewel box, Katie, you pointed it out this morning. I think it struck a lot of people to hear Mohamed El-Erian, of all people, say that if the Chair Powell's objective is to safeguard the Fed's operational autonomy, which he deems vital, he says, then he should resign. And I think it raises the question here, surprising to hear this from him. He says it's not the consensus view, but does this show that the pressure being put on the Fed chair is already impacting the market? It's already impacting what the independence of the Fed is perceived as by the market.
It is a little bit, and we saw last week when news reports hit the wire that the president was planning on firing Fed Chair Jerome Powell. Long-term bonds sold off pretty dramatically. When the president then pulled back during a meeting with, I guess, the Bahraini prime minister, that no, in fact, he was not planning on firing the Fed chairman, we saw prices rebound for those long-term bonds. Now, so clearly, Dr. El-Erian is correct that the market is questioning the extent to which the Fed can stand pat and stay politically independent of the administration. But as he goes on to say in that quote, the first best situation is not for the Fed chairman to resign. The first best situation is for rhetoric to sort of be toned down in the White House. And I think that we can see some of that. We are seeing some of that from Treasury Secretary Scott Bessent.
And it's interesting, you know, it feels like this is really heating up as we really barrel into a Fed meeting next Wednesday. Jerome Powell, even on the best days, I feel like he doesn't look forward to the press conference, but next Wednesday, I feel like he especially won't be excited for some of the questions he's going to be taking.
No, he's undoubtedly going to be sent the question, how much are you taking political considerations into account when you're setting interest rate policy? I think that the only real question to ask him about political considerations is, do you feel more compelled to stand pat and hold interest rates steady in the face of political pressure? When he then says, no, we're actually just focused on serving the American people, you then have to go and the next question as a follow-up should be, well, the bond market just last week, and into this week, has been questioning your independence, has been questioning your resilience to that political pressure. What can you do to regain the bond market's confidence that you are in full control of monetary policy?
That's the big question. We'll see if he gets that one next Wednesday at about 2:30 p.m. Stuart Paul, Bloomberg Economics, great to speak with you. Let's take a look at these equity markets just about 10 minutes away from the opening bell. You can see, again, taking a bit of a breather when it comes to the S&P 500. I'm going to go ahead and call that unchanged, but we know we managed to close in the green at a record yesterday, so can't complain too much. Then you take a look at the NASDAQ 100, down slightly, but pretty much unchanged. Same story, too, if you take a look at the small cap Sonali.
Can you believe that Matt Miller is not here to see 6,300?
I know. Somewhere, Matt Miller is celebrating.
Anyway, some more movers on our radar. A lot going on under the hood. Coal stocks today, they are climbing on potential production cuts at Chinese producers following government mandates to limit overproduction. Katie, have you been learning more about coal and copper?
Coal and copper? As I learned yesterday, smelting. It's a whole thing. thing. You can produce the copper in the U.S. and you got to send it out. I look forward to continuing my knowledge there. But coming up, analysts saying that Sarepta has zero value following the drug makers' fight with U.S. regulators. We're going to bring you the details on that skirmish next. This is Open Interest.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back. And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, we're monitoring Sarepta shares continuing to drop in the pre-market, falling 35% on Friday alone after its fight with the FDA developed. The FDA, or Sarepta rather, refusing to pull its lead therapy and then finally announcing a voluntary pause of the drug. Let's talk about this with Bloomberg Health reporter Bob Langreth. And Bob, you were telling us in the commercial break that controversy has been following Sarepta for a while, but get us up to speed on what's currently happening with this company and the FDA.
Yeah, so Sarepta's drugs have been controversial for a while over like the level of data backing the efficacy of the drugs and whether the drugs truly slow the disease or not, because the trials have either not been completed or in the case of this gene therapy produced kind of mixed results at best. But now the latest controversy is over the safety of the drug, and there have been 2 deaths in people on this gene therapy drug linked to liver failure. And then there's a third death that just emerged last week on a related gene therapy from Sarepta, also from liver failure. And then they've developed this huge fight, this unprecedented fight between the FDA and Sarepta over whether Sarepta should stop shipping completely stop shipping the drug while the FDA investigated the deaths and the safety. And Sarepta on Friday initially, refused the FDA's request to stop its shipments. And then late last night, it reversed course and capitulated and agreed to stop shipping the drug, which is its main drug. It's its biggest drug, this gene therapy drug, until the FDA finishes its investigation. So now it's not shipping, its biggest product. Its future, it's just not clear what's going to happen to the company right now. And it has a big debt load. Some of it's due pretty soon. And Yeah, everything's up in the air.
Yeah, well, when it comes to the future, you have H.C. Wainwright coming out and said that this company is worth zero. That is officially their price target. Bob Langreth, I know you're a busy man following this company. We appreciate your time. Now, less than 4 minutes until the opening bell. We're going to walk you through all the opening action up next with Doug Sioka of Kavar Capital. That conversation up next. This is Open Interest.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, you know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes out in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the official start of trading on this Tuesday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. You take a look at the setup as we head towards that opening bell. You can see a market really looking for direction, maybe dealing with a little bit of buyer's fatigue. Of course, we know we have a whole bunch of risks staring us in the face, really getting into the heart of earnings season, just 8 days away from that Fed meeting next Wednesday. And for right now, it seems like traders are content to let the S&P 500 hover, and I stress hover, at these all-time highs. You can see that the bells are ringing over at the NASDAQ, down at the New York Stock Exchange as we officially get underway on this Tuesday. Hopefully there's a little bit more action underneath the surface here.
There sure is, and traders are discerning this morning on earnings season. You have Lockheed Martin that was already down on the year. They cut its forecast after reporting a $1.6 billion loss on its aeronautics and helicopter businesses due to special charges. The stock down almost 9% at the open after more than 5% this year, Katie.
And we're also keeping an eye on General Motors actually beating estimates, but the automaker said that U.S. tariffs added more than $1 billion in costs for the second quarter. We'll be speaking with the CFO in just over 10 minutes' time. But I also want to talk a little bit about Kohl's here because shares are absolutely surging, up 85%. That move would be the biggest on record if that holds through the close. Still looking for a reason here. We will keep you updated. One potential, though, could be the fact that you have short interest clocking in at 48% of its float. So maybe a little bit of a short squeeze underway. We'll continue to monitor whatever is going on with Kohl's, but let's broaden out here because you have fund giants, including Invesco, Fidelity, and JP Morgan, really leaning into risky bets despite global trade tensions. Those firms are justifying that risk exposure with a Trump put, betting that President Trump's threats to disrupt the economic order will fall short of a complete collapse. That could suggest that sitting out of this market volatility is the riskiest position of all. Caval Capital Partners CEO Doug Sioka joins us now on that point. And Doug, it's interesting. At the same time that you have $7 trillion in money markets and growing, you also have the S&P 500 just going up and to the right. How are you making sense of the different cross currents at this point?
Yeah, thanks for having me on this morning. I think the market is in what we're calling kind of a greed with caution phase. I mean, there's certainly plenty of tailwinds, right? Earnings per share growth, it's early, right? But 83% of companies that are reporting right now are beating, so that's encouraging. So a very strong labor market, so that's fueling the consumer base of our economy that we rely on for propulsion. I mean, we do have modest improvement in like U.S. geopolitical standing, believe it or not, right? Despite some of the ongoing negative headlines. We've got currency weakness that helps multinational companies. And like I said, consumer resiliency. And keep in mind, Katie, that still 48% of the Russell 3000 are trading 20% below their 52-week highs. So if you broaden out, there's still some opportunity in investing in stocks for sure.
What an optimistic point of view on this. I think that this is exactly where I was going to go next, because if you look at the S&P equal weight versus the S&P 500, there is a divergence, and you're actually seeing, I'm stealing this from Kevin Gordon over at Schwab, another fresh 22-year low for that equal weight relative to the cap-weighted S&P 500. And it just shows you how much love there has been for the really big guys. I'm wondering how you feel about the catch-up trade. Who can be a part of it through the rest of the year when you still have tariffs weighing on some earnings?
Yeah, if you think about it, Sonali, right, you have four sectors that are really leading the U.S. market. And interestingly, I think everyone would be like, oh, technology. Well, technology's third behind industrials and utilities. You have two sectors, the S&P, that are actually negative year to date, right? You've got consumer discretionary and healthcare. Healthcare down by almost 3.5% year to date. So underperforming by 1,000 basis points to the S&P. And certainly, right, investors over-extrapolated probably the enduring positive impacts of COVID. I think they are now over-extrapolating the negative impacts of RFK's policies. And undeniably, right, mean reversion is very strong, but people probably overestimate how quickly it's going to happen on both the way up and the way down. So I think if you're just taking opportunities, the dollar cost average and the names that have been underperforming, but that have really strong balance sheets, great total addressable markets, and really strong sightlines on future cash flow with a multinational bent, there's still a lot of places to put money to work in the equity market. And that doesn't even mention the fixed income universe, which we think is still very attractive.
Well, just to your point on healthcare, don't forget we have the looming threat of pharma tariffs as well that this market is trying to make sense of. So we'll continue to watch that one. Healthcare, your worst performer year to date on the sector level. But let's talk a little bit about fixed income. I actually had a great conversation with the deputy CIO of DoubleLine Capital yesterday, Jeffrey Sherman, who said that he's positioning here for lower rates, that there could be a shadow Fed chair dynamic going on. We know that probably against Jerome Powell's wishes, the conversation around the Fed has become very, very political. How do you approach that, rather, from an investment standpoint?
Yeah, so if you think about it, right, what's most important about the bond market, right, is strong balance sheets. And corporations as well as municipalities have very strong balance sheets. They took opportunities, unlike the federal government, to refinance their debt when rates were at historic low levels. So you have really strong balance sheets. You also have tight spreads. So in our opinion, it doesn't make any sense to try to deviate from high quality. It's just not enough yield pickup to do so. You can put in place almost like a barbell strategy, because the middle of the curve, even though we've seen steepening, the middle of the curve is still offering some opportunities. If you can lock in 15, 20-year maturities at 2.5 to 3.5% of positive real yields, and then sort of spend a little bit more time at the front of the curve so you can be a little bit more flexible in reacting to Fed policy, we think that makes a lot of sense. But when you think about bond investing right now, be prepared for the perverse, right? The Fed cut rates 3 times, 100 basis points last year, and what happened? The yield curve steepened, came out of an extended inverted state.
Yeah.
That was way counter to what people's expectations have been.
I want to
Yes.
double down just on that point, because even if you get those rate cuts, there is a lot of doubt in this market that you can see it bringing down the long end of the curve. It was certainly what the Treasury Secretary would want. However, you have the market consistently betting on steepeners, particularly when the president has put so much pressure on the Federal Reserve. Deutsche Bank is looking at 30-year, so they're looking at the 5 to 30-year spread here. How much risk is there at the long end, and how much risk does that provide to the equity market as well if long end rates stay high?
Yeah, it becomes a headwind, but it comes back, Sonali, to supply and demand, right? If Bessent and the Treasury Department is talking about refinancing debt at lower levels, therefore the bludgeoning in public of Powell's unwillingness right now to cut considerably. If that happens, they buy more debt at the short end, you're going to see prices go up and yields down. They're neglecting the longer end, right? So you see prices go down and yields go up. So we do think there will continue to be some spread widening, but they're also actuarially, when you get to, let's say, 5.5% 30-year, God forbid it's to 6%, which is actually joking as relates to God forbid, because that could be a great opportunity. You have a lot of large institutions, pension, actuarial, hedge funds that will lock in those spreads, not to mention some of the carry trade capability that may arise. So we think there'll be enough demand when you get to that significant barrier, 5 to 6%. So that would probably stabilize that area, but supply and demand would indicate the curve's going to steepen if the Fed cuts.
All right, we'll have to check back in with you on that once we finally start to get some of those Fed cuts. Doug, great to see you. That is Doug Sioka of Kavara Capital Partners. Meanwhile, let's get a check on the stock market right now. I am so excited to talk about this move screen because take a look at that breadth. It's actually really good right now. You have nearly 400 companies in the green posting gains this morning, just 100 or so in the red, but you have the index pretty much unchanged, maybe a touch higher because take a look at the downside. Up at the top, NVIDIA down 1.4%. That is your biggest points contributor to the downside right now. That is weighing down this index, really keeping the S&P 500 constrained, even though you have all these names fighting to go green. It's a similar look at the sector level as well. Positive breath, really strong signal there, but still, when you take a look at what is losing today, it's the important names. It's tech down about 0.4%. Consumer staples also taking a hit. We were just talking about healthcare with Doug Sioka. You can see that healthcare, it's the worst performer year to date, but it's the best performer on this day, up 1.3%. That might seem unintuitive given our conversation around Sarepta, what's going on with that health stock, but Sarepta isn't in the S&P 500, and as such, you can see healthcare is your winner, at least for this moment, Sonali.
And coming up next, we're going to talk about another sector, autos. GM shares are falling, actually the most since April intraday, as President Trump's tariffs hit the company's earnings. We're going to be joined by General Motors Chief Financial Officer Paul Jacobson joining us next. This is Bloomberg Open Interest.
In case you missed it on Bloomberg Insight,
losing a few people is not actually that unusual. These companies are constantly pulling people, in both directions. The real question is, can it turn around Meta's fortunes? It's about who is leading in terms of adoption, in terms of B2B use cases, B2C use cases in different countries. And we're seeing Chinese companies certainly making a strong showing across many of those fields, even if, I would say that the US is still generally in the lead. But what we've seen at the company level and at the product level is actually that continued decoupling. So I think it's a pretty safe bet that is going to continue to be the case.
Not to bring up the past, but you've criticized Sam Altman. I'm just wondering whether you've made peace with Altman on the back of that drama.
So we haven't actually interacted since the time. I'm sure at some point soon we'll end up at the same event, and the AI world is pretty small, but no, haven't had a chance yet so far.
Don't miss Bloomberg Insight live weekdays.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Lululemon is getting downgraded over at JP Morgan. The analyst cites a more cautious and discerning consumer and sees growth constraints in the Americas region. Shares up very slightly this morning. Next up, we have Shopify getting cut over at Loop Capital on valuation concerns. Now, the analyst says that they would wait for a more attractive entry point. Maybe they're getting it today. Shares down 2.3%. And finally, TD Cowen is adding Norwegian Cruise Lines to its top picks ahead of its earnings next week. The analyst is also initiating coverage on Carnival and Royal Caribbean with buy ratings, saying that cruise lines in general are underappreciated. Now, one stock that we're keeping a close eye on this morning is GM. Shares are lower after the company said it will take a $1.1 billion hit to profit from President Trump's tariffs. Let's bring in General Motors Chief Financial Officer Paul Jacobson for more. Paul, it's great to have you with us. I want to talk about potential levers that you can pull here, because my understanding is that you really haven't raised prices to this point to offset some of those costs. I know that you're taking other measures, but is it possible that you could raise the sticker price on some of your vehicles to make up some of that hole?
Well, good morning, and thanks for having me today. It's a beautiful day here in Michigan, and we're celebrating another good quarter. And I think obviously tariffs have had some pressure as we've adjusted to them. But as we just said on our earnings call, we're 90 days into this, and our plans are still very consistent with what we said at the beginning, and we're going to continue to execute on that. We've got a strategy here that is both short-term and long-term. In the shorter term, we've talked about our ability to offset 30% of the tariff impact. That's through some cost austerity as well as some manufacturing changes and pricing. But we think that as we maintain our consistent pricing strategy where, we look at the demand for our vehicles and where that sits and our disciplined inventory approach, that we can continue to absorb that and reflect that in our traditional and sort of consistent pricing actions rather than going out and announcing big tariff-related increases, because we don't think that's necessarily good for the consumer as well. So pricing is a part of it, but nothing out of the ordinary or extraordinary from what our current strategy has been.
How much flexibility, Paul, do you have to make adjustments to supply chains here to meet the evolving auto tariffs and the parts that tariffs might hit in parts of the supply chain?
Well, there have been things that we've already been working on. So really, kind of since COVID, we've been looking at creating more resiliency in the supply chain, and we've onshored a lot of things, as we mentioned in our last call. Only about 3% of our direct purchases come from China through the supply chain. So that's helped us a little bit in terms of being proactive on that. Obviously, we'll do some resetting in partnership with our supply chain partners, but it really starts with our manufacturing footprint. Earlier in the quarter, we announced $4 billion of investments over the next couple of years to increase production in the United States. And when we're done with that, which will start in about 18 months, we'll be producing more than 2 million vehicles here in the U.S. So comfortably putting us in a position where we produce more vehicles here in the country than anybody else. So we're working on those and also partnering with the supply chain across the board. So while we have a pretty sizable tariff impact this quarter, as we've talked about, it's not a surprise against what we told the street at the beginning of it, and our plans are executing well according to our playbook.
Let's talk about how those plans play out over the course of 2025, because GM has said that you can offset 1/3 of that $4 billion to $5 billion in tariff exposure later this year as more of your mitigation efforts really start to take hold. Can you give us a timeline there? When might we see some of those efforts actually start to bear fruit in terms of offsetting some of these costs that you're dealing with?
We'll really begin to see that in the third quarter and in the fourth quarter, as we've told investors. Some of it is pricing, and our pricing was up in the first quarter. It was about flat here in the second quarter, but we've expected pricing to be up about 0.5% to 1% for the full year in 2025. So as model year 26 comes out, we start to see some of the benefit of that going forward. There's some cost initiatives which will be coming in the second half of the year. The team's done a good job of making sure that we're maximizing efficiency where we can, so we don't have to put all the burden on our customers to absorb all that. So I think we're in good shape. The second half should be better and should be more offsets than what we saw in the second quarter, as we're just adjusting to it. But that remains consistent with that 30% assumption that we had going into the year.
Paul, and this isn't specific to GM, but I do wonder how you can have confidence to say, the third quarter is when we might start to see these efforts bear fruit, given that it feels like the tariff landscape, in particularly dramatic periods, can change day to day. And from where you're sitting as the CFO of General Motors, is your opinion that the current tariff structure, the current stance of this administration, does this make U.S. manufacturers, U.S. automakers actually be more competitive at the end of the day?
Well, I think over the long term, certainly we do believe that it can be a more rational and more stable industry for us across the board, and we're going to work through that. We've already announced significant plans to increase production here in the U.S. It started with the decision to increase the line rate and our production rate in Fort Wayne, where we'll produce another 50,000 trucks and SUVs on our trucks on that line going forward, and that'll hit us this year. So that's already taken effect. The changes that we announced earlier this quarter, we'll start to see those in about 18 months across the board. So, I think it clearly is having the intended result, and one that I think will be net good for us going forward over the long run. We are optimistic about bilateral trade deals, and as they work through, in particular with Canada and Mexico, and also Korea with our footprint there. But where we feel comfort in the fact that the auto industry is very important to us as well as it is to Korea. So we believe that they'll be able to work out a deal, and ultimately that'll be good for both countries.
What can you tell us about any future capital allocation? Is GM planning to do any share buybacks, especially in light of some of the cost reduction efforts you're taking in the second part of the year?
So capital allocation is one thing that I think we're really proud of as a team and what we've been able to deploy consistently. First, we invest in the business. We'll be investing $10 to $12 billion over the next couple of years. That will allow us to both improve and continue our great vehicle portfolio, but also these footprint changes that I mentioned earlier. But even with that, we're producing sizable free cash flow, and we're able to make sure that we protect the balance sheet as well as return capital to our shareholders, and we've established a pretty good track record for that. Earlier this morning, we announced that we've resumed share repurchases in the month of July. As of June 30th, we had $4.3 billion remaining under our authorization and strong free cash flow projected. So I think it's something that the shareholders can benefit from as well as we drive this efficiency into the business to ultimately help mitigate some of this tariff exposure. So overall, I feel good about where we are, and we're working hard for the shareholders.
Paul Jacobson, Chief Financial Officer of General Motors. We thank you so much for joining us this morning. All eyes on that auto industry. And coming up next, all eyes on railroads as well. CXX, Norfolk Southern, BNSF is reportedly eyeing a deal, and investors are sussing out whether it's one of the two. More on railroad M&A next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
BNSF, it's the railroad giant owned by Warren Buffett's Berkshire Hathaway, reportedly working with Goldman Sachs to explore a takeover of the rival. Let's get more details now from Bloomberg's U.S. Deals Managing Editor, Leanna Baker. So that is the rumor out there, right? And that's what the street seems to want to believe. Warren Buffett maybe not cooperating with that narrative.
Right, so we couldn't independently verify the info, and it looks like he threw a little cold water on the report. You know, Warren Buffett doesn't love working with bankers, you know, paying that extra fee. However, it makes sense right now for all the different railroads to find a dance partner and probably use a banker to do so. So it's not crazy that all these railroads would have an advisor, since there was a report last week that Union Pacific, the largest U.S. railroad company, was in early talks to buy Norfolk Southern, which would create a transcontinental railroad and set off potentially a wave of consolidation in the space.
Yeah, can you drill down a little more here on how the dance card is going to play out here and how there are not that many of them, right? So do they all have to consolidate at some point?
It's a great question. So there's about 4 of these Class 1 railroads, as we call them, and there could be, different combinations. But from what analysts are saying, Union Pacific and BNSF, the bigger players, would have to be the buyers, let's say. They're also the West Coast players, and then the East Coast players, Norfolk and CSX. Those would be the ones they'd have to combine with. But we're not sure at this point, which ones will play out. But we have reported that Union Pacific is in early talks with Norfolk Southern, so that's definitely one to watch.
What are you hearing about why this specific moment? And is it just because we got a deal last week, now we're looking around the rest of the space, or has this been percolating for a while?
There's a few things. So the Union Pacific CEO, Jim Vena, since he came out of retirement, he's been sort of banging the drum that there has to be consolidation in the space. The regulator that governs railroads, the economic regulator, the Surface Transport Board, Trump installed a new chairman. So it's a Republican chairman. And if these companies believe the Transport Board will approve mergers, now is the time to pounce with this administration.
Absolutely. This is the space, one of the spaces to keep an eye on. Great reporting. Looking forward to more of it. That is Leanna Baker of Bloomberg News. Now, coming up in the next hour, it is packed. We'll be speaking to the U.S. CIO of Mercer on tariffs, testing earnings. Then we'll talk about regional banking with Fifth Third CEO Tim Space. Looking forward to that conversation. And also, venture capitalist Alan Patrikoff joins to discuss investing in longevity. Don't go anywhere. This is Open Interest on Bloomberg.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A brutal heat dome will make for a torrid Tuesday around much of the country.
It will feel like 110 degrees in places from Kansas City northeast to Milwaukee and south to the upper Gulf Coast. Skylar Moss manages landscape crews in Memphis, Tennessee. Extreme heat may prompt her to change schedules.
I try to encourage my guys to take as many breaks as they feel that they need, and if it's just like absurd, ridiculous, then we can move things around.
Midweek temperatures across the middle of the country will be 10 to 15 degrees above normal for this time of year. Jim Crisula, CBS News.
Some parents and children will cool off at the mall, where prices are what's heating up.
Some 30% of back-to-school shoppers for the upcoming school year say inflation is changing the way they shop, according to a new Bankrate survey. That's down slightly from 32% last year. Fewer Americans also say that back-to-school expenses are putting pressure on their finances. 20% say the costs are straining their budgets, down from 31% in 2022.
CBS's Jennifer Kuiper. Treasury Secretary Scott Bessent tells Fox Business he's headed overseas as a mid-August deadline looms for steeper tariffs on China.
I'm going to be in Stockholm on Monday and Tuesday with my Chinese counterparts, and we'll be working out and what is likely an extension then. I think trade's in a very good place.
Bessent says he's hopeful the tariff deadline will be extended. Passengers on a Delta flight from Minneapolis to Minot, North Dakota are coming to grips with what could have been had the pilot not swerved to avoid a B-52 bomber on its way to a flyover at the state fair. CBS's Chris Van Cleve.
Just out of the blue, just sort of very abrupt, like U-turn.
Monica Green was on that flight.
It just felt like going around a sharp turn on a roller coaster, kind of, but I could look out the window and see straight at the grass instead of seeing the horizon.
She shot video capturing the pilot's post-landing announcement.
Sorry about the aggressive maneuver. It caught me by surprise.
The Air Force says the flyover was approved by the FAA. Hunter Biden speaking out a year after his father dropped out of the presidential race.
George Clooney is not a actor. He is a I don't know what he is. He's a brand. And by the way, and God bless him.
He not only rips his father's critics, but presidential aides. In an interview with YouTube personality Andrew Callahan, the younger Biden claims they gave his 81-year-old dad Ambien to help him sleep after grueling overseas trips that preceded that disastrous performance at the debate with then candidate Donald Trump. This is CBS News. Target's ending a popular policy.
This weekend at Target,
Target says as of next week, it will no longer match prices from top competitors Walmart and Amazon. The policy, in effect for more than a decade, allowed shoppers to request price matches from those two retailers for up to 14 days after making a purchase at Target. The chain says it will continue to match prices internally between different Target locations and its online store. That means if a customer finds a lower price on Target's website, for example, the company will match the price in a 2-week period. Steve Kathan, CBS News.
Almost a week after President Trump made the claim, Coca-Cola confirms it'll introduce Coke made with cane sugar in the U.S. this fall. It's been using high fructose corn syrup to sweeten its namesake soda here since the 1980s. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. Lisa Mateo, Paul Sweeney here with the Bloomberg Intelligence program. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. What does he think this Fed is going to do in the upcoming months? We'll check in with him on that. Sarah Ponczek, financial advisor at UBS Private Wealth Manager. She's down in Florida. We'll get her thoughts on the markets here. What are her clients doing in the markets? David Welch, Bloomberg Detroit Bureau Chief on GM earnings. GM profit falls as Trump tariffs add $1.1 billion in cost. That's real money. David, so we'll check in with David Welch there. And Will Lee, Bloomberg Intelligence Aerospace and Defense Analyst. Talk to us about Lockheed Martin. They had some disappointing numbers on what that means for that business. We got a lot coming up in the next 2 hours. Lisa Mateo and Paul Sweeney. Right now, let's go to John Tucker and get a Bloomberg Business Wrap.
Okay, after a record-setting rally, the major stock averages mixed right now, and this Bloomberg Business Flash is being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest-cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. You have 7 of the 11 major industry groups in the S&P 500 higher right now, and a defensive sector, healthcare, that's leading the way. Information technology, that's the biggest drag. That's home to stocks like NVIDIA. Those shares, they were down close to 2%. And I did want to bring along this headline to you. We've been telling you about the SharePoint attack at Microsoft. Microsoft now accusing Chinese hackers of exploiting SharePoint. And as a result of that, quick look at Microsoft stock shares. They're down 0.4%. In light of the earnings, Matt Mishkin at John Hancock Investments says the record-breaking rally is pretty fragile at this point.
We're right back to where we were at the beginning of the year. It's an extended market with really multiples hitting on at least the 4 PEs back to about 22.5. You know, the highest in history is 24.
Yeah, right now the S&P 500 15 points lower. That's down 0.25%, 62.89 after yesterday's record. The NASDAQ 100 is down 169 points, and the Dow Jones Industrial Average right now 46 points higher. You got to ask the question, is it a meme stock now? Kohl's, ticker symbol KSS, earlier they were up as much as 105% pre-market. Kohl's shares, they paired some of those earlier gains. They are up right now just 28%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. I will give you your daily New Jersey ocean water temperature report, John Tucker. I just
yes,
got
sir.
From Seagert, 74 degrees.
Bit of a chill when you first get in, but you warm up real quickly.
So come on down, folks.
And the water's been great.
I love it. Is this a daily thing? I love
this. It's coming up here. I get it. I get my flash from my people down there. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we're joined by Bloomberg's Denitza Sokova. Denitza, what are you looking at in the market today?
Let's start with General Motors. Through of negative earnings this morning, General Motors ticker is GM. Of course, we're talking about that 1.1 billion profit hit. It's coming from Donald Trump's tariffs. And the company revealed no plan for a near-term fix to return to pre-tariff profit levels. The stock really stumbled on the open. It's down now about 7%. Profits suffered from high warranty costs and a buildup in inventory of electric vehicles. We, of course, have that bill that is cutting subsidies for electric vehicles, so that's putting even more pressure on the company. The results show how difficult it is to maintain those profits in the current regime with tariff wars and obviously very complicated for global supply chain. And GM is kind of the first one where we see this big hit starting to weigh on. GM hasn't moved to raise prices. Instead, it has opted to absorb some of the costs. There were some positive things in the report. It grew US vehicle sales. It actually achieved a second straight quarterly profit from China, but clearly this is not enough to lift sentiment today. The stock is down 7% year to date, and today is one of the worst days in quite some time.
It is. Okay, how about take us to the world's largest defense contractor? We're talking about Lockheed Martin.
Another disappointing earnings report, second quarter earnings that fell short of analyst estimates. The company also lowered its outlook for the year. The ticker, of course, is LMT. The stock is down about 7%. The company said it incurred costs including $1.6 billion in program losses from a classified program, and there was also a separate helicopter development efforts with Canada and Turkey that also led to a big loss. It's interesting, we had that contest about the F-47 fighter jet that eventually went to Boeing, but the company said it incurred $169 million of other charges related to that. Of course, the F-35 is still seeing strong demand from foreign countries like the UK, but what we're seeing is actually the Pentagon reduced the number of jets in its 2026 budget. So that's putting even more pressure on the stock, which can explain why the company is down 12% year to date after a really tough day today.
Now, we're switching gears big time here. Lululemon.
Yes. It's totally different industry, but an important one nevertheless.
I'm a huge fan of Lululemon.
I am as well. The ticker is LULU. The company actually fell in pre-market. Now it's recovering some of that losses, which maybe comes with retail euphoria in some names like Co. But what we're seeing is that famous black leggings, which I am a fan of, they're rarely discounted, but now we're seeing them pile at outlet stores. So clearly that is a sign of a time. And today we had a downgrade from JP Morgan, cutting the stock to neutral from overweight. And they're citing those company-specific conversion rates. And of course, the same store sales growth constraints in America. We actually had Goldman Sachs as well, lowering the firm price tag to $251 from $285. So a lot of pressure there. We have the CEO trying to revive sales at Lululemon. There is a rising competition, and I don't know, Lululemon leggings are around $100, but if you go to Alu Yoga, I think it gets even more expensive. So clearly, the consumer is not that under pressure if they can afford $120 leggings.
Are you guys Lululemon customers?
No, they're a little bit out of my league for the price.
Too expensive?
I love them. The black leggings, I keep buying them. And they last a long time. So
last a long time? But I won't go to John Tucker for...
No, I have been in. I purchased a pair.
Them?
Not for myself.
Oh.
They
my daughter.
They do have a great men's collection.
Yeah, they do. And they have a lot of accessories and stuff.
It's better than Athletica.
I think so, yeah.
Okay, good.
And it lasts much longer.
All right, very good. Denise Sokova, thanks so much. She covers all the markets for us. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get right to it here. One of the, I guess one of the narratives in the marketplace is what's going on with our U.S. Federal Reserve and our Fed chairman. Some political pressure being exerted on the Fed chair pretty overtly by President Trump. And what does that mean for the Fed, for the markets? Ira Jersey joins us here, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Ira, how's your market, the Treasury market? Does it care about some of the rhetoric coming from President Trump and his social media as it relates to Fed Chairman Jay Powell?
Yeah, I've been speaking with a lot of market participants over the last couple of months about all of the rhetoric about, Powell resigning or Powell getting fired by President Trump. And then you had Scott Bessent, of course, come out this morning and saying there's no reason for him to resign at this point. His term's up in May, which is true. So Jay Powell will likely be leaving in May permanently from the Federal Reserve. The market does care, and the market cares, I think, in particular because for two reasons. One is political independence. So the Federal Reserve tends to be an independent policy-making body, and if there is more political pressure exerted on it, then maybe you get monetary policy that's too easy for too long, and that will potentially generate inflation. And that's, I think, the one of the big worries about Fed independence and what's going on with monetary policy at the moment.
So if you were asked, Deutsche Bank said it could drive the 30-year yield higher by more than 0.5 percentage point. I mean, what do you think will happen?
Well, that's not impossible, and that's certainly one of the risk case scenarios, I think, is that you wind up with what we call a twist steepening. So you can wind up seeing, if Donald Trump gets his way and you wind up seeing much lower interest rates in the short end, you can wind up with this fear that you have higher inflation over time, plus you still have some, not a lot of fiscal restraint coming out of Washington, so long-term interest rates could go up pretty aggressively. Our call is that we will hold the cycle highs in the long end for now. So maybe a 20 basis point, 25 basis point sell-off it would be anticipated. I think given an ugly unwind of Fed independence. But keep in mind, like one of the things is even if Jay Powell were to resign today, there's still a committee that sets monetary policy. So even if you have a new chair come in, it's not obvious to me that you'll wind up getting a majority of the current members of the Federal Reserve to just unilaterally go along with the new chair. The chair is not a dictator. The chair is the first among equals, and I think that there'll be much more debate. Maybe there'll be a number of dissents. You could even see a lot of dissents next week, potentially with Chris Waller potentially dissenting because he thinks that they should lower interest rates, and I suspect that most of the committee right now thinks that they shouldn't. So you can see much more vigorous debate maybe around where monetary policy should be set.
WIRP Go, the WIRP function, the world interest rate probability, still kind of showing, I guess, about 2 rate cuts priced in by the market for this year. Does that seem reasonable to you, Ira?
Yeah, I do think that the Federal Reserve will likely cut this year, but I think not as early as what the market's pricing. So if you look at the WIRP function and some other instruments in the market, like the options market, we're pricing basically for a September and December rate cut. I suspect that we'll get 50 basis points of rate cuts, but it's either going to be November, December, or maybe just a 50 basis point in December to kind of kick off another easing cycle. Because look, if you look at the preponderance of the data that's come in, it's really not that bad. And so I'm not sure what the economic reason for the Federal Reserve to be cutting interest rates today actually is based on the current data and incoming data. But we do forecast that the data will weaken as the year progresses, and as the data weakens, that'll be the impetus for the Fed to cut.
Ira, thanks so much for joining us. Always appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, safely ensconced down in Princeton, New Jersey. Coming up, Sarah Ponsek. She's at UBS. Get her thoughts on these markets. What are the conversations she's having with her clients? And Drew Redding, Bloomberg Intelligence U.S. home building analyst. D.R. Horton. Shares jump. EPS pretty solid. They're still building houses. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages mixed after yesterday's record close for the S&P 500 and the NASDAQ. S&P 500 16 points lower. That's down 0.3%. It's 62.89 on the index. The NASDAQ 100 right now 165 points lower. That is down 0.7%. And the Dow Jones Industrial Average bouncing between gains and losses right now, just down 4 points. Philip Morris, worst performing individual stock in the S&P 500. It was down about 8%. They posted organic revenue growth for the second quarter that trailed expectations. Earnings, too, from General Motors. They suffered a $1.1 billion profit hit from the tariffs. Lockheed Martin shares right now, they are down 5.9%. The biggest drop since January. The defense contractor reporting earnings, missing estimates, lowering the outlook for the year, racking up $1.6 billion in charges. And oh yeah, a duplex penthouse at the planned 50-story Waldorf Astoria residence tower in St. Petersburg, Florida, actually sold. I guess this is when they sell it on spec. 27 million bucks. Nice. This smashes the record for the most expensive condo in the Tampa Bay area.
Yeah, this isn't Miami. This is Tampa.
It's but far cry from the top end of the market in Miami. That's where it was a $120 million sale of an oceanfront penthouse.
Is that Mike McGlone?
That was at the Shore Club in Miami Beach. That holds the record.
How many bedrooms
I think
do you
Sarah's
get
got a
for that?
place there.
Yeah, I know. Well, Sarah's a player down in South Florida, to be honest with you. Let's get right to her. Sarah Ponzak, First Vice President of Wealth Management at U.S. Private Wealth Management in Boca Raton, Florida. So, I mean, just how good is that? I mean, she's killing it down there. Sarah, what's the conversation you're having with your clients these days? I mean, boy, if they went to sleep New Year's Eve, they woke up and they say, oh, we're up 6-7% in the S&P. That was a nice, boring first half of the year, but it's been anything but that. So what are your conversations like?
Thanks, Paul. I appreciate it. It's always great to be with you guys and back with the Bloomberg team. It has been quite the interesting year. And, you know, what's interesting now is a little bit over halfway through the year, there has been plenty of volatility to hang your hats on. But if you were in the midst of it, which we all were in April, it has certainly not felt calm at all. And yet, like you said, if you would have gone to sleep and woken up today, you would think everything in the world is okay. Your portfolio just continued riding higher throughout the year, but that's not the case. So back in April, there was certainly much more shock and awe and concern, having conversations constantly with clients, acting as a therapist in a certain way, trying to calm clients down, talk them off a ledge, try to convince them not to, move out of the country, move their assets out of the country, or sell assets and go to cash, because we all know markets nowadays just move so quickly. And now in July, anyone who did not act in that manner is sitting very pretty and is very happy. And frankly, clients seem pretty calm. Markets are now trading at records. We're in the midst of summer, which gets a little bit quieter when it comes to high net worth and ultra high net worth clients. So the outlook from here, now that things look nice, are pretty strong from a client's perspective, which is interesting because, when things are going well, everyone's always asking, well, what's around the corner? But right now, people are pretty optimistic, pretty strong, and pretty happy with the way things are looking from here.
And are they pretty optimistic, Sarah, about the earnings season? We have more than 30 companies reporting in the S&P 500 today. What are investors looking for? Is it just tariffs? I mean, are we off to a good start so far?
It's not just tariffs. Tariffs are absolutely a big part of the earnings season. And just as we did last earnings season, investors, analysts, everyone's out there listening for any commentary on tariffs, how their businesses might have been affected and how they may be affected going forward, especially now that tariffs are showing up somewhat in the economic data. But so far, yes, it's very early on in the earnings season. but numbers have been pretty good. If you look at what we've seen so far, a little bit over 15% of S&P 500 market capitalization has reported. Nearly 80% of companies are beating earnings per share estimates, and guidance has also been stronger than expected. And we all always point to guidance. Yes, we want to know what happened in the last quarter or the last 3 months of the year, but we all really want to know what's coming next. So the fact that companies have been guiding stronger than expected, especially in an environment where some tariffs have kicked in. Yes, we're dealing with some uncertainty leading up to an August 1st tariff deadline, but it does seem like companies are coping pretty well. One area of the market that I do think has been very interesting so far has been tech, particularly because even though tech has been performing well so far. Again, it's very early. We haven't heard from that many companies. We're going to hear from some big players this week. But so far, we have seen an average EPS beat for tech companies of about 7% on average. And yet, if you look at these tech shares, we've actually seen them decline 5% on average after beating EPS estimates. So what that tells us is that the bar is very high, expectations are high. We should probably expect volatility and bouts of it over the next couple of months, but that's to be expected after we've seen one of the strongest pre-earnings season rebounds from the stock market on record, to be sure.
Sarah, what's the conversation you're having with your clients these days about fixed income? Because they can get real yields in the treasury market. They can maybe get even higher yields if they want to go in, take some credit risk, and maybe even in the municipal bond market. What's the fixed income conversation?
Absolutely. Look, we still like fixed income. I think what's interesting is clients more and more so seem to be souring on fixed income and souring on bonds because for a couple of years now, we've all been talking about interest rates coming down. Not only are you now getting income from your bond portfolio, but you might also get capital appreciation. And that just hasn't quite come to fruition. And sometimes people have, a little bit shorter, their patience isn't quite there, waiting and waiting and waiting. What's nice, though, and what we always have to explain to clients is, look, like you said, Paul, you're getting a real yield. You're getting income. Your bonds are paying you true income nowadays, which we all know just a few years ago was certainly not the case. And now we also have Federal Reserve officials talking about lowering interest rates. It seems like we're knocking on the door. We're not quite there yet, but we can actually see, the whites of the eyes of rate cuts potentially. So when it comes to fixed income, we're still very optimistic. We're still telling our clients, be patient, wait. You are collecting a coupon and you're collecting great income along the way. If you're a client who either needs the income or doesn't have the risk tolerance to be more so in, all stocks or private investments and have a well-diversified portfolio. But fixed income nowadays, especially if you're looking at, high quality investment grade corporates, you can get some nice yields there.
Yep, absolutely. Sarah, thanks so much for joining us. Always appreciate chatting with you. Sarah Ponczek, she's the first vice president of wealth management for UBS Private Wealth Management down there in Boca Raton, Florida. The high temp's going to be 90 today in Boca. That's not terrible. I mean, you got the ocean right there. The humidity is 74%, so it's going to be a little sticky.
What's their water temperature?
Yeah, the water temperature's like probably 80.
Yes.
So I'm not sure you can get much relief there. All right, let's switch over to the home builders. D.R. Horton reported numbers that I guess are really, really good. The stock's up 13% here. So I guess the home building business is still a good business. Drew Redding, Bloomberg Intelligence, U.S. home building analyst, joins us here. What's going on with D.R. Horton? The street really likes what they had to report today. Drew, what do you see?
Yeah, so a nice relief rally for the builders as a whole following Horton's results. The bar was pretty low coming in. You have to remember the group as a whole has been facing a wall of worry, whether it's, rising existing home inventories, the potential for falling home prices, weaker consumer confidence. So investors were looking for any positive news to get interested in these stocks. Orders were flat, slightly better than expected. Importantly, though, gross margin actually exceeded guidance, which is something investors are really paying attention to given the incentive environment. Now, that being said, they did tighten the range of their guidance for full year closings, and they do expect that incentives heading into the fourth quarter are going to remain elevated and potentially even higher based on what they've seen over the last couple of weeks. So better than feared results, but the risks are still out there.
And how is that affecting other home builders, for example, Lennar, Toll Brothers, companies like that?
So from a stock perspective, I mean, you're seeing across the board a favorable reaction. I think just some optimism that maybe builders are going to be able to hold the line a little bit better on margin. That's what we're hearing from a lot of them, is rather than going out and throwing more and more incentives at the buyer, there's kind of diminishing returns there. So I think what investors want to see is maybe you scale back on your use of incentives, or at least hold them stable, and focus on keeping your gross margin stable rather than just driving higher volumes.
So, I mean, looking at the Mortgage Bankers Association, 30-year fixed mortgage, 6.82%. I mean, that seems to be the kind of the new world we live in. Has the real estate market, buyers and sellers, have they adjusted to that, Drew, or is there still an expectation, I'm going to wait for a 4 or 5 handle?
Yeah, I think it's safe to say we're in a higher for longer environment. We've been, hovering at these elevated levels for quite some time now. As you all know, the builders have been able to get rates significantly lower than what we're seeing, as a headline number out there in the market. Horton actually said that in their backlog, the average mortgage rate was around 5%, and they're often offering FHA mortgages around 4%, so significantly lower than what we're seeing. Have buyers adapted to this higher rate? In some instances, yes, but I think what we need to see is not only rates come down, but we need to see rates kind of sustain themselves at a lower rate. Part of it's not only been the absolute level, but it's been the volatility and just how much they've moved around over the last several months. I think that's impacting buyers' confidence.
Hey, Drew, are there certain areas of the country that are hotter for the home building market than others?
Well, I wouldn't really call any market across the country hot
Hot
right
right
now.
now, yes.
I think, the weakness is pretty much broad-based, and a lot of it has to do, and we're seeing it particularly so in markets where the existing home inventory has really risen. So the ones that come to mind are Florida, Texas, California, and those are the largest markets for the builder. If there was a bright spot from a regional perspective, I'd highlight the Midwest and Northeast, which traditionally aren't the strongest markets, but they don't tend to boom and bust as much as some of the others. So you hadn't seen quite the level of home price appreciation as you did in some of the southeastern markets. So you're not seeing as much pressure. So when you look at inventory levels in the Midwest and Northeast, we're still well below where we were in 2019. So we think on a relative basis, you'll see more stability in those markets.
Drew, thanks so much for joining us. Appreciate it. Drew Redding, home building analyst for Bloomberg Intelligence. I don't know, in New Jersey, these houses go before the sign even gets in the ground.
Yeah, and where's the space sometimes? I always feel like they're going high-rise sometimes instead of building the homes that people want.
I don't know. I just think the New Jersey market is just ripping. I think, well, I'll just say the Metro New York market. But we had a banker on here from Huntington Bank earlier, and they just made an acquisition in the Carolinas and Texas because they still see great growth there. That's where the people are going, they say, and that's where the businesses want to go. So it's probably still a good business. But, those markets in Florida, they always boom and bust, it seems like.
It does. I've had problems in Jersey. They haven't been nice to me trying to buy a home.
I know. All right, so we'll see. Looking at the markets here, kind of red and green on the screen here. We'll go with the S&P off about 10 points. We've got the Dow up 47 points, the NASDAQ down 115 points. So again, red and green there. Yields coming in just slightly. 10-year Treasury down about 3 basis points, 4.34%. That should help the mortgage market. We'll have more coming up. This is Bloomberg. Good morning.
I'd like to talk about the ultrasound.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 dropping from a record, and also a gauge of the Magnificent Seven mega caps, sliding right now about 0.9%. This all comes in the run-up to results from Tesla and Google parent Alphabet. The chip makers, they're also lower. This comes after NXP Semiconductors. They had kind of an underwhelming outlook. And we're also seeing tariff impacts in results. General Motors saying it suffered a $1.1 billion profit hit from the tariffs. Michael Gapin at Morgan Stanley says a lot of the impacts from the tariffs are still working their way through the U.S. economy.
As inflation picks up here in the second half of the year, that should eat into real income and real purchasing power. So we think the fourth quarter and the first quarter will actually see more of a slowdown. So a lot of these effects, in our view, are still yet to be seen and still lie out in front of us.
Right now, the S&P 500, 9 points lower, 62.96 on the index. The Dow Jones Industrial Average up 36 points. The NASDAQ 100 is down 120 points. Microsoft accusing Chinese hackers of exploiting those vulnerabilities in the SharePoint software. That's led to breaches worldwide in recent days. Governments, businesses, other organizations across the world, they've been breached because of the vulnerabilities leading to the theft of sensitive information. And new data centers for artificial intelligence. Of course, they're all the rage, but the independent watchdog for the nation's biggest power grid, PJM, says there's no spare supply for them. Artificial intelligence is driving the biggest U.S. surge in electric demand in several decades, and of course, it competes for power from demand from all of us for our air conditioners, etc. But I'd gladly give up air conditioning so that a data center could have its power.
I'm waiting to have mine installed.
Your data center?
No, my air conditioner.
Oh, we check the markets for you all day long, right here on Bloomberg. You don't have air conditioning?
No, in my Poconos house. There's no air conditioning.
But it gets hot in the Poconos.
It does get hot, yes.
Yeah, so I don't know. They sold you a bill of goods.
Thank you, John Tucker.
You're quite welcome, Lisa Mateo.
I was thinking on the positive side.
All right.
So, yeah, General Motors, that's what we want to get to. It took a big hit from President Trump's tariffs. Are you ready for this, Paul? Okay, $1.1 billion profit hit. So what kind of impact is that going to have for the company? Well, we want to hear from the expert about all this. So let's find out, and let's go to David Welch. He's Bloomberg Detroit Bureau Chief. He's joining us live from Detroit. So, David, were you surprised with that figure, $1.1 billion? I mean, we heard from Stellantis, too, kind of saying something similar yesterday.
No, not surprised at all. GM said they were going to take a $4 to $5 billion hit, or at least that they had $4 to $5 billion in exposure this year to tariffs, and that they would only be able to offset about 30% of it. And the measures they're using to offset that, you really won't see till the second half. So I thought there would be a pretty big hit to it. I don't think the street was surprised either, because the forecast for GM's earnings were for a pretty big drop off of the second quarter of last year already. GM did better than that because they did have some things, better profits in China than we saw a year ago, and better sales in the U.S. that helped them. But overall, pretty tough quarter, and it really shows that the car companies are going to have a tough time getting anything close to pre-tariff profits going forward, because there's just no easy way to get around them.
So, I mean, is what we're to take away from the Stellantis numbers yesterday and the GM numbers today is that the auto manufacturers, for whatever reason, maybe they're just not able to, or they chose not to pass along the bulk of their cost increases to consumers? Is that a policy, or is that just an economic reality?
It's an economic reality. And look, Stellantis has a lot of other issues. They're going to do some pretty heavy restructuring, which they talked about yesterday. But look, we're at a period right now where interest rates are at pretty high levels. You have historically, not record, but pretty close to record new vehicle prices in the U.S. right now. Average monthly payment, well over $700 a month. We have a record number of people, I think, paying more than $1,000 a month for their monthly payment. Cars are expensive. So, you can go out there and say, hey, I'm going to pass this tariff cost on to consumers or even some of it. But if consumers don't pay it, then you just lose the sales. And you haven't seen huge price increases. You've seen small ones. You've seen companies sneak in, some bigger fees for transporting the vehicle, for example, things like that. But it's just not, they just don't really have the ability to push in big price increases to pass on, in GM's case, $1 billion worth of tariffs in a quarter.
And it's not just tariffs. What else affected profits for GM? I mean, how's their inventory for electric vehicles?
They built that up in the quarter, and since the vehicles lose money, they have to account for that. That cost them, I think it was $600 million in the quarter. They had $300 million because they've had a big engine recall, so they've had higher warranty costs. It wasn't just because of that recall. They've had other issues, and they're working on that. Some of these quality issues you're seeing that are costing companies more in warranty and recall type costs are all the software that goes into electric vehicles. These are kind of first times out with new software, new infotainment systems, power management systems in these vehicles. And it's just tough for them to go out there and not be buggy, right? Think about how many times there's something on your smartphone that needs an update, and fixing that with a car is often more expensive. So some of it was related to that, and actually, they saw pricing go down with some of their fleet customers. There's a lot of competition out there for the corporate and fleet business, and they actually saw some downward price pressure there too, and that cost them $200 million. So a lot of things in the quarter that pushed profits down, but tariffs are the real story here.
David, you're out there in Detroit. You live and breathe this stuff every day. What's the feeling in Detroit as it relates to this evolution to EVs, and how will the tariff and the tariff impact on profitability? Is that going to slow this down even more, do you think?
I do. I think everything the Trump administration is doing is really going to slow the EV transition. First of all, the obvious one is come September, they're going to be getting rid of the $7,500 tax break for qualifying electric vehicles. But with tariffs, you've got battery components, electronic components, wiring harnesses. There's more wiring in an EV than in a conventional vehicle. All that stuff adds to the cost of vehicles that already lose money. Some of them are actually built overseas. In the case of Hyundai, they make some of theirs overseas. GM makes a couple of its EVs in Mexico. They do qualify for USMCA, but there are still some parts component tariffs that they can be hit with on some of these vehicles. And so you add cost to vehicles that are already, you can't pass it on. If you do, even fewer people will buy them. Companies may have less incentive to build and sell them if they lose even more money on these. So that's going to hurt as well. And then, of course, Trump's rhetoric for people who are politically right of center and pretty far right is that, EVs are a dumb purchase and they don't work for you. And I think that hurts sales as well. So all of this is just not good for the momentum that EVs had in the U.S. Before Trump got in office.
Yeah. So, David, last month the company said it would shift some production to the U.S. from Mexico. So what other changes can we expect to see from the company, like in the last minute or so we have left?
I think you'll see them try to bring more of the parts they buy into the U.S. So they'll be encouraging their suppliers to do what they're doing, which is move some production to the United States, and that'll take time. And, you may see them, make some more production-related moves. What they've done is pretty big, so I'm not anticipating any big announcements. But, as they look at this and they find other ways to do it, you might see more vehicles, more parts built here in the U.S.
Thank you so much, David Welch, Bloomberg Detroit Bureau Chief, talking about GM earnings and so much more.
I'm looking at GM right here. If you go GM Equity FA, just brings up the financial statements. Their net income margin is 5%.
Okay.
That's it. They got like no margin, no profit margin. Anything goes wrong for these auto companies, and they get screwed.
You always say, I never understand the auto companies.
I just don't get it. And oh, by the way, my top line's flat. I mean, you know, it's a
high volume, low margin business.
Yeah, we'll make it up on volume. I guess it's one of those businesses. So it's just a tough business. And then you throw on top of it tariffs. And then, oh, by the way, I have to change my entire industry that I've built up over the last 100 years to go electric. Yeah, I'll invest in that. I don't know.
We got to shift production, U.S. to Mexico. It's never ending for them. All right, coming up this morning, we have a lot more in store for you. We have Will Lee, Bloomberg Intelligence Aerospace and Defense Analyst. He's going to be talking about Lockheed Martin, cuts to earnings outlook, booking program charges. We'll talk about those charges coming up. Stay tuned for more of Bloomberg Intelligence.
Listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
You know, we don't talk too much about is these defense contractors, but that is a huge business. They're in the news all the time. But let's change that here. So we're going to do that. Lisa Mateo, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Let's talk about Lockheed Martin. Put out some numbers. Disappointing here. Took some losses here. Let's break it down with Will Lee, Aerospace and Defense Analyst for Bloomberg Intelligence. Well, Lockheed Martin, I mean, they just do everything. What happened in the quarter?
Yeah, so I mean, if you look at the quarter, the performance was muddled by this hefty $1.6 billion chart program losses, and then another $169 million of other charges. There was the NGAP write-off. I think that was around like 66 million.
Let's go back to the big one, 1.6 billion. So what's that for?
So out of that 1.6, 950 million is for a classified aeronautics program.
So they can't tell us what
they can't tell us what it is. But if it's something that big and it's been going on, and in fourth quarter, they also recorded another $440 million or $477 million.
Let's stop doing that program then. I don't know.
They could tell you, but then they have to kill you.
Well, given that it's a huge program and they're taking over $1 billion of charges, what could possibly be so important and so big? It most likely is a named sixth generation ISR.
What's an ISR?
Intelligence, surveillance, reconnaissance. So think of it as the replacement for the SR-70. SR-71.
Oh, now we're talking. SR-71.
72.
72. Okay.
So if you think about, in that respect, Boeing has the F-47. That's the sixth generation fighter jet. That's going to be the biggest sixth generation program. Navy wants their own sixth generation, the FA-XX. I think that Northrop has the inside track to win that, given that DoD doesn't want to make the same mistake that it made with F-35, with F-35, F-22, given Lockheed both control of the fifth generation fighter, so they break up into multiple defense contractors and have more resilient industrial base. So with that mindset, Boeing has F-47, Northrop has the FA-XX, and Lockheed could potentially have the sixth generation reconnaissance aircraft.
So will all those numbers, my son would be having a field day with this conversation right now. He is so into this. Is this typical of defense contracting environment? I mean, growth is marginal there. You were mentioning a number of numbers before. Is this typical?
I mean, to this large extent, this is sort of unusual. I mean, Lockheed teased that they were looking at additional charges after the quarter. They didn't mention or indicate how large that magnitude was. So this sort of caught the street by surprise, the size of it. But I mean, I think it just shows that this is a key program that's going to keep going forward. But even if you just strip out all the charges from the quarter and you look at the underlying performance, the performance actually was not bad. In the second quarter, aeronautics grew 7% on high F-35 volumes, and the F-35, and they also took up the cumulative profit booking rates on the F-35 in the quarter. And the missile and fire control segment, it grew 11% on strong demand on tactical and strike missiles. So you're talking about the JASSM air-to-surface missiles, the LRASM anti-ship missiles, and the GIMLRs that are used on the HIMARS. Those are rockets that we've been sending over to Ukraine.
So I'm looking at the comps. They're all trading up on the year. Defense contractors' stocks are doing great this year, with the exception of Lockheed Martin. It's down 11% year to date. What up with that?
Well, I mean, the biggest headwind is the F-35. You have the F-35 is the news. You have talks of why do we need to have F-35s in the fiscal 26 budget request. The Air Force cut the number of F-35s to 24, and that's down from 44. So across the board, I think that's the biggest headwind on Lockheed, and the fact that you're not seeing that more. You're seeing flat revenues and no real margin improvement. So I think those are the two big headwinds.
Yeah, can you get into that a little bit more? Like RTX Corp, Northrop Grumman, like what are they doing better that Lockheed isn't?
Well, I mean, in terms of with Northrop, they're levered to the B-21 program and the Sentinel. So with the B-21, you're hearing talks of the Air Force looking to accelerate production, add more quantities. And that program right now is in this EMD phase. Engineering, manufacturing, development. So think of it as sort of this is still in the development, low-rate production phase. But then it's going to transition to a production phase. And when it goes to a production phase, you can see potentially higher quantities. And Northrop talked to that on their earnings call this morning, saying that we're in discussions with the Air Force. And if we increase the production rate, we might have to take make additional investments, which means a headwind to earnings. But at the same time, they could potentially realize profit on these low-rate initial production lots and not to exceed subsequent follow production, whereas before they were expecting no profits on the LRIP phase and some profit on the next NTE phase.
All right. It just seems like it's good to be in the defense business. It just seems like, we spend money on defense year in and year out. Lockheed Martin had a tough day today. It is down 6%. LMT is the ticker. Will, thanks so much for joining us. Will Lee, aerospace and defense analyst for Bloomberg Intelligence. breaking down the LMT data here. And the market, S&P off 6 points, Dow up 37, NASDAQ down 95. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio and Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Tom from the Upper East Side writing in, I need a Bitcoin quote, 119,000. It's up almost 2% today. Gold, not surprisingly, following along, it's up $30, $3,425 for an ounce of gold. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check in with Mary Ross Gilbert. She's Bloomberg Intelligence Senior Equity Analyst covering the retail. Kohl's. Is Kohl's, like the department store Kohl's, is that a meme stock now? I have no idea. It's all over the place. We'll break it down with Mary. Chris Watling, CEO and Chief Market Strategist at Longview Economics. Give us his thoughts on the markets. We're also waiting on President Trump. He's participating in a bilateral meeting with the President of the Republic of the Philippines, named Ferdinand Marcos Jr. So if there's some comments there, we will bring them to you as well. Ken Shea, Bloomberg Intelligence Senior Consumer Analyst, on this whole Coca-Cola, sugar, high fructose corn. I don't know what's going on here, but we'll talk to him about Coke, maybe talk about Philip Morris as well, a lot of the consumer stuff he follows. So we got a lot coming up in this hour. Let's kick it off. John Tucker with a Bloomberg Business Flash.
All right, guys, the major stock averages right now kind of mixed, slide in several of the big tech stocks, dragging down stocks overall. Worst performing major industry group in the S&P 500 right now, that belongs to information technology. And, of course, that is home to shares of NVIDIA. They are lower right now. They're down over 2%. On the earnings front, you just talked about Lockheed Martin reporting second quarter earnings falling short of estimates, also lowering the outlook. General Motors suffering a $1.1 billion profit hit from the tariffs. No plan for a near-term fix to return to pre-tariff profit levels. And meantime, despite yesterday's record highs, Tracy McMillian at Wells Fargo sees plenty of risk for investors ahead.
You know, we're looking at things like a bearish seasonality that's coming up in the fall, the tariff policy that's likely to be implemented on August the 1st, earnings season disappointments possibly, labor market weakness.
And the S&P 500 right now, 8 points lower. That's down about 1/10%, 62.97 on the index. Dow Jones Industrial Average is up just 18 points. And the NASDAQ 121 points lower. That is down 0.5%. Oh, the creators of Comedy Central's South Park have reached a breakthrough in pretty tense negotiations over the streaming rights to the long-running cartoon. LA Times says Paramount has agreed to buy the global streaming rights for South Park to bring the show to the company's digital service, Paramount Plus, for the first time in the U.S. Tomorrow, Comedy Central kicks off the 27th season
27
of South Park.
That's a lot of South Park.
You've seen every episode, I bet.
They killed Chucky. That's all I knew. Or what is his name? I don't even know.
Chucky. Kenny.
Kenny. There
Good
you go.
Lord. Anyway,
See, I don't watch it.
we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa.
I love it. Thank you, John Tucker. Always making me smile. All right, let's take a look at some of the stocks on the move today. I'm Lisa Mateo alongside Paul Sweeney, and we are joined by Bloomberg Denitsa Tsekova. So you want to kick it off with Circle Internet Group, correct?
Yes, the share actually
So 8% today. Obviously, the stablecoin issuer was on an incredible rally after its IPO. It's still up. It's up more than 500% since its IPO. But that initial euphoria, it was kind of day and a day of double-digit gains, seemed to be fading. What we're seeing today is a downgrade to sell. It's coming from Compass Point Research. Their price target cut is also significant from $205 to $130. And we're actually seeing more and more sell ratings for the company. It currently has 4 sell ratings and 6 hold ratings. So those are piling up pretty fast. Obviously, a lot of companies are just initiating their coverage. But the analysts are saying that their long-term margins and market share expectations may have to be recalibrated. So their main cryptocurrency stablecoin is USDC. And it's already integrated with 24 different blockchains. And there are only so many chains that can afford these integration fees. Of course, a lot of the euphoria was happening as the stablecoin legislation was moving through Congress. That is done now, so that could be one reason we're not seeing so much euphoria. Of course, the ticker is CRCL. Still massive year-to-date gain, but a lot of downward pressure coming in the last few days.
All right, just to remind people, this thing IPO'd June 4th of 2025 at $31 a share. It's now $200 a share.
Incredible.
That's not bad. What else you got?
Yeah, not bad at all. Another one that's kind of in that realm of massive jumps, and I would classify it as a meme stock frenzy. Open Door Technologies. Yesterday was a massive jump. It jumped as much as 121%. The ticker is OPEN. Today, it's extending that rally. Now it's a little bit slower, but it jumped as much as 24% in earlier trading. Shares were holded because of volatility. It's kind of a sudden retail favorite. It's also coming off social media posts from hedge fund manager Eric Jackson, who made a series of posts encouraging buying. It was one of the most popular stocks on stock tweets and Reddit Wall Street bets. We're kind of seeing this week a big resurgence in those, which I don't know where it's coming from, but clearly there is a low sentiment. Market is at record highs, crypto is at record highs. The stock was down 51% before this. Now it's up 111% year to date.
It's like we were saying at Kohl's this morning. All right, lastly, Philip Morris.
Philip Morris, very different story, but the stock fell after shipments of Zyn nicotine pouches. Those are obviously kind of very popular in some time. Their net revenue also missed estimate. The company lowered its outlook for total product shipments, dragged down by cigarettes. Shares of Philip Morris fell as much as 10% in earlier trading. This was the biggest intraday drop since March 2020. They had soared at 50% so far this year, so clearly this one-day drop is not that bad. But
Thank you, Denitsa Tekova, so much for your insight. You can listen to for more conversations like this we just had. Subscribe to our new Stock Movers reports. You can listen for 5-minute audio reports on the biggest winners and losers of the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and also anywhere else you listen. All right, so she talked about Open Door Technologies. Let's get to that other one, Kohl's. Their shares surged as much as 105% in early trading. Now their shares, well, they're up about 36%. It's just a record move. A lot of mentions by retail traders on social media. Let's bring in someone who knows a little bit more about this. Let's bring in Mary Ross Gilbert. She's Bloomberg Intelligence Senior Equity Analyst covering all things retail. So, Mary, can you tell us, is this a meme stock?
Well, it's acting like a meme stock, that's for sure, Lisa. And as you pointed out, it was on social media. It looked like midday yesterday there was a post showing a Bloomberg chart and showing the short interest. And if you look at the number of shares or the shares borrowed versus the total float, it was about 49%, which is pretty high. And it's near a historic high, at least over the last couple of years. And so the post sort of circled that, and then it identified and noted, hey, how can you be short this stock and sleep well at night? And then apparently that kind of triggered other posts throughout, I guess, into the evening yesterday. And so, of course, in pre-market, we saw the share surge, as you pointed out, over 100%. And, you know, yesterday the stock was up about 8%. We saw retail stocks on the move yesterday as well. And so it could be, you know, as one of your earlier commentators discussed, you know, with such a strong market overall, this is a sector that has been beaten down largely with tariffs and then, of course, with execution issues when we're talking about coals.
Mary, has the company said anything either last evening or today in response to the stock movement?
Absolutely not. There are no releases from the company.
So, I mean, is this something, I mean, what are you hearing from, you know, the clients that you talk to, institutional investors that you talk to? How are they selling into this? What are they doing?
Yeah, I'm not hearing anyone discussing exactly what their activity is, but you can imagine that there's probably a fair amount of hedge funds involved. And so when you think about it, the company is highly levered, they have bonds, and hedge funds typically will take a position, let's say in certain bonds, and then they'll go short the stock. So I think we do have some of that activity, and that's how they're positioned. And of course, you know, there could have been a short squeeze that was triggered with this activity. This is usually what we'll see in a situation like this. So I think that's kind of what we're seeing in the activity in the shares.
And Mary, before all this news came out, how was the stock doing before? How was Kohl's performing before all this?
Oh, it's been atrocious. I mean, the stock is, you can look at 3 years, 2 years, 5 years, year to date, and the stock has been off significantly. And that's due to falling revenues. I mean, if you look at the revenues over the last few years, it's down over $2 billion. And really, when you look at the core business, it's down even more. And that's even with adding, you know, $1.8 billion in revenues from Sephora. So it shows that there is trouble in the core business. And of course, they've rotated through several CEOs, and they're on an interim CEO as they hunt for a permanent, their fifth CEO in just over 2 years.
Oh, boy. Jeez. All right, Mary, that explains it all. Mary Ross Gilbert, thank you so much for joining us. Mary Ross Gilbert, she covers the retailers for Bloomberg Intelligence. She's based out there in our Los Angeles bureau. I'm going to get right to our next guest. He's got some very interesting calls I want to explore. Chris Watling, CEO and Chief Market Strategist for Longview Economics, joins us here in our Bloomberg Interactive Broker studio. Chris, welcome. Time to sell gold? Really?
Yeah.
Why?
Oh, yeah. Okay.
Let's get right into it.
Okay, good. Yeah, I mean, you know, gold's had such a good run since, you remember, it had some lows in October 2022 after they finished hiking. During that hiking cycle, it didn't do well. It's run up tremendously, more than the S&P since then through to April this year. And, you know, gold loves it when you're pricing in loads more rate cuts globally. It loves it when you're losing money. It doesn't like it when you're getting a cyclical recovery coming. And I think globally that's what we've got coming in the sort of, I call it we're in the foothills of the sunlit uplands.
Okay.
You know,
Where are the sunlit uplands?
Well, we're in the foothills, and we can see the sunlit uplands.
Okay.
And that's kind of what gold's doing, is looking out and it's thinking, goodness me, some good stuff's coming. We're going to have a normal recovery over the next 12, 18 months globally. And we've kind of forgotten what that is post-pandemic. And that'll be negative for gold, basically.
Now, stocks are coming off another record for the S&P 500, right? Markets kind of seem unfazed by the tariff news. What kind of message are you seeing?
A message on equities is a bit of summer turbulence. I think you're right. Market's too complacent. It's kind of forgotten there is some challenges out there. You know, one of them is the tariffs, as you say, but also I think, you know, I'm talking about sunlit uplands, but I think at the moment the U.S. economy is slowing. And it's probably slowing faster than people realize. And so I'm a little bit concerned the Fed's behind the curve. So I think there's a bit of summer turbulence. Markets are complacently priced. You know, you were talking about those sort of meme stocks. And if you look at retail volumes traded of retailers trading single stock call option volumes, they're just taking off. I mean, it's a great sign of exuberance. And a lot of our models have gone really from fear to greed. So the market's very greedy, complacent, and something's going to spark it, I think, and it'll have a little tricky summer.
How about the, you know, we've seen the U.S. stock market rebound, retrace all the losses from earlier this year, and then some. Not so much the dollar. What do you make of the U.S. dollar here? Still down, you know, the Bloomberg Dollar Index down 8-9% from its recent high.
I think the dollar's in a long-term downtrend, but that's kind of not new news. Everyone's talking about that. I think.
Well, just recently they are. I mean, I couldn't pay somebody to give me a bear case for the U.S. dollar for years.
Right. Yeah, that's true. Well, people have given up on the idea of American exceptionalism, hasn't they? Which was the thing in January, and now it's not the thing. I mean, there's no doubt America's still exceptional in many ways. But I think what's happened is all the capital's flown to the US in the last 10 years. It's all been sucked up by AI themes and some great stocks here. And now there's, if we get these sunlit uplands, that's a global story. So there's interesting stories in the rest of the world, which is why I think, capital is going to be more broadly shared across the globe, and therefore the dollar's not just going up forever. But having said that, I think we're in a counter-trend rally for the dollar because nothing goes in straight lines. And so a stronger dollar over the summer wouldn't surprise me at all.
Chris, tomorrow we have Alphabet, Tesla. Some reports, I read one yesterday that said AI is dividing the fortunes of the Mag 7. What's your take on this sector?
Well, it's true, isn't it? It's not the Mag 7 anymore. What is sort of the Mag sort of 3 plus 3 plus 1 maybe? I mean, the one outstanding winner, 3 perhaps also runs, and 3 way behind, I think, in terms of the pack. So I think that's kind of interesting as well. When you get into the capital flows, it's no longer one way. I remember running around the world last year, asking people about. Everyone was in love with Apple and Nvidia. There was Australia, Hong Kong, so everywhere you go, they love those stocks. And now I think the world's just waking up. They're not all amazing. Great companies, but not all great AI powerhouses.
What do you expect from earnings this season? We're kind of getting into the teeth of it here. What have you seen so far? What do you think we still need to see?
Well, it's early days, isn't it? I'm kind of interested in what we get from the industrials in terms of the industrial cycle stuff. The banks have done reasonably well, as we all racked over last week. And of course, the tech will be critical. But it's really the guidance that I'm interested in. The companies set themselves up to pull the earnings down and beat. That's kind of standard fare, isn't it? Every quarter, they beat by 4 to 8% on EPS, and really it's about the guidance. I think that's the critical thing. What's it telling us about the economy? Because there's no doubt large parts of the U.S. economy are struggling and under pressure. Good parts of it are really good, but large parts I think are struggling, and we'll probably see some of that in earnings.
Yeah. So where do you see signs of weakness?
Well, there's been no growth in the industrial cycle for 3 years. Housing activity's flat on its back, has been for 3 years. Lower-income consumers are under pressure. Look at auto loan delinquencies or some of the other consumer delinquencies. And I think job growth is slowing. So I think if you look at GDP ex-consumption, I know consumption is most of it, but ex-consumption is basically not growing. So I think there's lots of signs of weakness, and fiscal policy for now is actually tightening up. So I think the economy needs rate cuts.
So what do you think this Fed will do?
Yeah, will do and should do is a different ball game. They seem to be. I think they've got to go in September. Maybe we get a speech at Jackson Hole late August that sort of reinforces that. I think they should do 3 this year, and they'll probably do 2. Would be my guess.
Chris, thanks so much for joining us. Appreciate it. As always, Chris Watling, CEO, Chief Market Strategist, Longview Economics, joining us live here in our Bloomberg Interactive broker studio. Looking at the market, still kind of mixed here, Lisa. So we're going to need, I think, some more earnings. And as Chris was mentioning, maybe from the tech sector to kind of give us some better sense.
We've got a lot coming up.
We do.
Today, there's like 30 in the S&P 500.
Yes, exactly right. So it's a big week, last week, this week, and next week we could get most of the S&P 500 out there for you. Just looking at the dollar, the Bloomberg Dollar Index, we had a couple of days of stabilization, but kind of trading off again here a little bit on the margin today. So we keep an eye on that. And WTI crude oil, John Tucker, he gives us the gasoline report from the Wawa Route 36.
It is below $3 a gallon.
See,
so
there you go. That's all the news you need to go. The WTI crude oil off $1 here today, $66 a barrel. So we'll keep an eye on that. And Tom Keene, Upper East Side, $119,000 on Bitcoin. So he's just loving it there. So S&P 500 down about 10 points. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, after yesterday's record close, the major stock averages mixed to little change, I'll call it. Tech leading the market lower. This comes ahead of Google parent Alphabet's results. We're going to get those after the close of regular trading tomorrow. We're also going to hear from Tesla after the close. The Bloomberg Mag 7 index right now down about 0.7%. The General Motors, those shares, they're down just about 6.7%, despite reporting a stronger profit for the spring than analysts expected. They did say they're still expecting $4 to $5 billion hit to results over this year because of the tariffs. Gains for some of the home builders, they are reporting stronger profit for the spring than Wall Street had forecast. I have D.R. Horton, for instance, and bring that up right now. Those shares, they are up close to 14%. And Philip Morris shares pulling shipments of its nicotine pouches, accelerating, but less than analysts had expected. And shares of Philip Morris right now, they are lower, down 8.2%. Overall, the S&P 500, 7 points lower. That's down 0.1%. 62.98 on the index after yesterday's record close. The Dow Jones Industrial Average up 40 points. Right now, the NASDAQ 100 after yesterday's record close down 125 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Lisa.
All right. Thank you, John. You were listening to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. And we are in the thick of earnings season, right? Among those companies today, one of them, Coca-Cola. Beat on second quarter sales growth profit. But it's another headline that's getting some attention. They are launching a new Coke product that's made with cane sugar. So here to tell us more about it is Kenneth Shea. He's Bloomberg Intelligence Senior Consumer Products Analyst. Kenneth, thanks for joining us here from Princeton. How much of an impact did the president have on this decision from Coke?
Yeah, hi, Lisa. Well, it's hard to say, but it certainly is in sync with what Coca-Cola has been doing for a long time, and that is keeping its pulse on what the consumer wants to do. It has a lot of assets at its disposal. And a cane sugar product is not novel to Coca-Cola. I mean, it's produced in the U.S., largely more outside the U.S., but in the U.S. on a selected basis. So it's really just going to expand that. It may have been prompted to a degree by the president's tweets or whatever, but it's certainly in sync. Like I said, you know, there's an audience out there that prefers sugar-based as opposed to high fructose corn syrup-based full-calorie sodas, and they're going to play into that. Most likely, it's going to be a brand Coke extension, and it's going to be sold at a premium price in selected markets to give it an aura of exclusivity, I'm guessing, to command those prices. And so it just adds a little more excitement. It's one of many things Coke is doing now on the innovation front.
So from Coca-Cola's economic perspective, do they care which ingredient they use?
Well, it depends, Paul. It depends if they can capture the premium price they're going to, price it at. Cane sugar costs more than high fructose corn syrup. Corn is a heavily subsidized crop in the U.S. They built their supply chain around HFCS because of that. And most consumers really, they don't really notice the difference. Some do, but by and large, they've grown that franchise very well. But I guess, some tourists who go to Mexico and they taste the sugar, cane sugar Coke down there, and they say, you know what, this is really good. And they want to capture the same experience in the U.S.
I'm going to Chipotle today, and they do offer the Mexican soda there.
Can I give you the history of high fructose corn syrup? It was in the 1970s with high inflation and high sugar prices. President Nixon said, do something about this. And his guys said, well, we can make a sugary tasting stuff from corn from American farmers. And
there you go.
Thus, high fructose corn syrup, which most doctors say is like poison to your system. But there we go.
John Tucker with the value added there. Let me shift gears here. What is a Zin patch?
a Zyn patch. I'm not sure what a patch is. I think they made a pouch.
Pouch.
The Zyn pouch is a pouch. You know, it's an oral tobacco product. Actually, Zyn doesn't even contain tobacco. It's a synthetic product that's laced with nicotine that is a facsimile for tobacco, which a lot of people will say causes harm, and a lot of people are right. So this is a product that people can get their nicotine buzz in a hands-off kind of way, doesn't emit smoke, doesn't offend your neighbor that you're working with, and it's done really, really well. So those are the Zyn pouches that are doing really well. Yeah.
I thought it was Zinfandel, the wine. That's no kidding. No kidding.
I get that pouch.
So, but I mean, it's big enough a business, Ken, that Philip Morris would call it out.
Oh yeah, no, Zyn, it's about 8% of their sales, I believe, at this point, but it's growing, at a 20-30% rate, as opposed to cigarettes, which are flat, if not down. But IQOS is their smoke-free device segment, which is doing very well. But at the law of large numbers, at some point, that's going to slow. And Zyn is filling the gap to keep the overall volumes in a positive trend. They price these things very high. There's not a lot of competition in this space. So, one of the things investors would say about the world of tobacco is because it's so consolidated, they can pass on a very high pricing. And that's what really drives the top line and, the cash flows and so on. And Zyn plays very, very, very well into that model.
And how does it fare as far as we hear about e-cigarettes, vaping, things like that? How has Philip Morris been doing competing with this category?
So they have a product called Vive, which is their e-vapor product, as opposed to what they call heat not burn, which has actual tobacco in it, and they would say is a more appealing alternative for smokers who are trying to quit. It's a lower margin product. It's kind of seen by Philip Morris as a kind of an entry-level product. For those who are trying to move away from combustible cigarettes, they can turn to e-cigarettes, a low-cost method, and their hope is that even though it's a low margin product, their hope is that they can get that consumer maybe at some point to trade up to their heat not burn product, which is a more profitable product for them.
All right, good stuff. I mean, I learned about the Zyn pouch today. How about that? It's not Zinfandel. Okay, all right, very good. So good stuff there. Ken Shea, thanks so much. Ken covers all those consumer products companies for Bloomberg Intelligence. Appreciate getting a few minutes of his time. All right, literally the first job on Wall Street was it wasn't the first job, but one of the early jobs on Wall Street was a research assistant covering the railroad and trucking stocks. And so I know this business, and I've always said, hey, how come Norfolk Southern doesn't merge with Union Pacific? And then the lawyers would always say, the government will never allow it. Stupid, go back and do your spreadsheet. But that's what I think they're talking about these days. So let's check in with Lee Klaskow. He does this, covers all this stuff for Bloomberg Intelligence. Lee, again, I got slapped down a million times for saying, what is a Norfolk Southern merge with UNP? Is this really a possibility these days?
I think it's a possibility. Is it a high probability? That I really don't think so. I mean, combining an Eastern network and a Western network will really create a lot of efficiencies. But a lot of stakeholders might say, wait a minute, because this might impact them, whether it's shippers that might feel that they have less pricing power or ability to push back on price increases. You have the short lines that might also feel like they might not have a lot of pricing power, and so the shippers, the short lines probably may not be very for this kind of deal. And then you have politicians. So politicians are going to weigh in. Those that represent states that are big in ag and chemicals might have something to say about these rail mergers, because the rails have to prove from a regulatory standpoint that it's in the public's interest of this merger going forward. And that can take years to happen. The STB has a formal process which the rails have to adhere to. And, it's early stages. These are kind of whispers that are happening right now. We've heard that Union Pacific is in fact looking at Norfolk Southern. Whether that actually ends up in a deal being announced, that remains to be seen. And then, if that does happen, it really would force a Burlington Northern which is owned by Berkshire Hathaway, to look for either to make another a bid for Norfolk Southern or look at the other rail, CSX in the east, for a merger. Otherwise, it'll be at a competitive disadvantage to that kind of single line coast-to-coast network that could be formed.
Hey, Lisa, what's driving this consolidation?
I think that probably, you have Jim Vena, the CEO of Union Pacific. He has seen the benefits of mergers at his time as Canadian National. I think that's one thing. Then also you have obviously more of a quote-unquote pro-business administration in the White House right now. The STB, they have a new chairman who is probably a little more rail-friendly, I would say, than the past one. And so that might be something as well. But like I said, there is a process in place, and this is not necessarily like, oh, if they announce a deal, it's going to happen. There could be a lot of roadblocks, and there could be a lot of conditions if a deal were to transpire, meaning that the rails might have to, sell parts of the network, which could be good for, private equity that is looking to buy short lines or some short line players that are looking to consolidate themselves.
So I would think from shippers' perspectively, they would like this, wouldn't they? Wouldn't it be cool just to be able to ship something from the West Coast that came in off a cargo ship to the East Coast?
Yes and no. So it would probably improve the overall service of the network because the less time a rail car is touched, the less chances are something can go wrong, and it could be probably a better service offering. I think it's really concerns about pricing. Even though, a Western rail and an Eastern rail don't compete directly, the railroads can play, or the shippers can play the rails off each other in terms of trying to get the best price, because you could work with one rail going to a different Eastern carrier. So there is a pricing ramification there.
And what are I mean, it's sure there's some risks associated with consolidation. What are some of them?
Well, the risk is that, like in 1980, before the rails were deregulated, there were about 30 Class 1 rails. Today, there is 6 and now 5. So it's just a shrinking overall market, and that just will concern people about competition.
I was covering this industry when we took a company public, Consolidated Railroad. We chose not to be in the underwriting group so that we could write research. So we sacrificed the underwriting fees. We would have been a chump co-manager. But that's how we did it. And we wrote the first research report on Consolidated Railroad circa 87, something like that. But Lee's the expert now. Lee Klaskow, Senior Transport Logistics and Shipping Analyst for Bloomberg Intelligence. He's down there in Princeton. Coming up, Brian Fisher, Bloomberg BNEF EV charging team leader. What's the story on EVs here? It can't be constructive here. President Trump does not, and his administration does not seem to be a real supporter of this transition from ICE engines to electric vehicles. But we'll get the latest from our good friends at BNEF. They are the experts. This is Bloomberg.
This is breaking news from Bloomberg.
All right, Lisa Mateo, Paul Sweeney here with you in the Bloomberg Interactive Broker Studio. President Trump is participating in a bilateral meeting with the President of the Republic of the Philippines, Ferdinand Marcos Jr. Let's go to that meeting right now in Washington.
Various places all over the country, big manufacturing plants, pharmaceutical plants all over the country, so that's an honor. And he said they did that because of the election and because of the fact that the tariffs are placed. So they're building their facilities in New York. $50 billion, that's a big investment. And it's going to be a very good investment. I have no doubt about it. So thank you to AstraZeneca. And with that, I'd like to have you say a few words, please.
Thank you very much, Mr. President. Of course, we're all very happy to be here to once again reaffirm the very strong ties between the Philippines and the United States, ties that go back over 100 years. And considering the context in which we live these days, especially in my part of the world, this has evolved into as important a relationship as is possible to have. We must remember that the United States is our only treaty partner in the Philippines, and that has stood us in good stead over the years, certainly through the Second World War, and the cultural memory of all Filipinos, down to even the school children, is that our strongest, closest, most reliable ally has always been the United States. That is something that we value, that we are grateful for, and that we will continue to foster as we go on. With the leadership of President Trump, I am very confident that we will be able to achieve that. I think it is worthwhile to remember that it was President Trump who, in his first term, characterized the relationship between the Philippines and the United States as ironclad. And that has been necessarily the case since that time that you made that statement, sir. And it is something that the Philippines will always hold close to its heart. Thank you once again, and we are honored, and it is our great pleasure to be here and to visit with the President of the United States. Thank you, sir.
It's my great honor. Any questions, please? Yeah, please, go ahead. Go ahead.
Mr. President, do you think that Fed Chair Jerome Powell should resign?
I think he's doing a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out. But I call him too late. He's too late all the time. He should have lowered interest rates many times. Europe lowered their rate 10 times. We lowered ours none. And it's causing a problem for people that want to buy a home. Look, our economy is so strong now, we're blowing through everything. We're setting records. You know that, you see that. And whether it's the Philippines or anyone else, we're setting records at levels that nobody's ever seen before. But you know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high, and probably doing it for political reasons. The only time I remember him cutting rates, he cut the rates just before the election to try and help Kamala or whoever he was trying to help. He probably didn't know. And he's building a building. He's $2.7 billion. They have a $900 million overrun. What is that? And that was given by Biden. That was another Biden deal. And this guy's building this building that's severely overrun. And what does he need the building for? What does he need? He needs space for more people. So they did a big study the other day, and they called all of the great intellects and the great economists and all of the great everything. And it was 71, and only 2 got it right. Me and another gentleman that happens to be very smart. 69 people got it wrong, and the Fed got it wrong, more wrong than anybody. And he has these think tanks, and they build buildings for people that think. And it's really not thinking. It's a little bit of combination of thinking, but it's something you sort of have or you don't have. They don't. The job he's done is just terrible. He ought to raise interest rates. We should be at 1%. We should be leading the world. Instead, we're paying 4%. And if you look at what that means, that's over $1 trillion in interest that we have to pay. That with the striking of a pen, we would be saving more than $1 trillion. Is that right, Scott? Do you have anything to say about it?
Yes, sir. I called yesterday and this morning for the Fed to do a big internal investigation to understand not their monetary policy, but everything else. The Fed has had big mission creep, and that's where a lot of the spending's going. That's why they're building these new or refurbishing these buildings. And I think they got to stay in their lane. And I think that based on the way they cut rates last fall, they should be cutting rates now.
It's inconceivable, I know the Fed very well, that they can be spending $2.7 billion to build a building. They don't do anything. It's the greatest job. You show up one day, a half a day, you make a little speech, the economy's doing well, the economy's not doing well, we're going to raise interest. And he's got it wrong. That's why I call him too late, T-O-O, too late. And it's really too bad. But it is affecting people that want to buy houses, and that shouldn't happen. And he should lower them. Those rates should be 3 points lower. That's what they should be, 3 points lower, maybe more than that.
I would like to ask both for you one person. Mr. President Marcos, next year, Philippines is going to be the rotating chair of ASEAN. I wonder how do you plan to balance your relationship between the United States and China? And for President Trump, Kremlin yesterday said if you are going to Beijing in September, they wouldn't rule out a meeting between you and President Putin. Is such a meeting possible? And how soon do you plan to visit China?
Well, we have a lot of meetings possible. President Xi has invited me to China, and we'll probably be doing that in the not too distant future, a little bit out, but not too distant. And I've been invited by a lot of people, and we'll make those decisions pretty soon. Please.
Well, as you say, we are chairing ASEAN for 2026. There is no need, in a sense, to balance, as you characterize as, to balance our relationship between the United States and China, simply because our foreign policy is an independent one, and we are essentially concerned with the defense of our territory and the exercise of our sovereign rights. Now, whether we do this not alone, we need to do this with our partners. And again, our strongest partner has always been the United States. But of course, we are trying to form coalitions and multilateral relations so that those like-minded nations who share the same values as we do, who hew to international law, most specifically the UNCLOS, present that position very clearly to anyone who has intentions of unilaterally changing the world order, and that is how we are guided in that.
And I don't mind if he gets along with China, because we're getting along with China very well. We have a very good relationship. In fact, the magnets, which is a little complex piece of material, but the magnets are coming out, very well. They're sending them in record numbers. We're getting along with China very well, and I don't mind if the president dealt with China. If that's meant, because I think he has to do what's right for his country. I've always said, make the Philippines great again. Do whatever you need to do, but you're dealing with China wouldn't bother me at all.
Well, now it is something that we have to do in any case, and certainly that.
Mr. President, do you support the Justice Department seeking an interview with Ghislaine Maxwell? Did you urge the Attorney General to seek one?
I don't know anything about it. They're going to what? Meet her?
Your Deputy Attorney General has reached out to Ghislaine Maxwell's attorney asking for a new interview.
Yeah, I don't know about it, but I think it's something that sounds appropriate to do, yeah.
Do you have any concern that your Deputy Attorney General, as your former attorney, would be conducting the interview, given...
No, I have no concern. He's a very talented person. He's very smart. I didn't know that they were going to do it. I don't really follow that too much. It's sort of a witch hunt, just a continuation of the witch hunt. The witch hunt that you should be talking about is they caught President Obama absolutely cold, Tulsi Gabbard. What they did to this country in 2016, starting in 2016, but going up all the way, going up to 2020 in the election, They tried to rig the election, and they got caught. And there should be very severe consequences for that. You know, when we caught Hillary Clinton, I said, you know what? Let's not go too far here. It's the ex-wife of a president, and I thought it was sort of terrible. And I let her off the hook, and I'm very happy I did. But it's time to start, after what they did to me, and whether it's right or wrong, it's time to go after people. Obama's been caught directly. So people say, oh, you know, a group. It's not a group. It's Obama. His orders are on the paper. The papers are signed. The papers came right out of their office. They sent everything to be highly classified. Well, the highly classified's been released. And what they did in 2016 and in 2020 is very criminal. It's criminal at the highest level. So that's really the things you should be talking about. I know nothing about the other, but I think it's appropriate that they do go.
May I ask you about that, Mr. President?
Yeah.
Tulsi Gabbard has submitted a criminal referral to the Department of Justice. From your perspective, who should the DOJ target as part of their investigation? What specific figures in the Obama administration?
Well, based on what I read, and I read pretty much what you read, it would be President Obama. He started it. And Biden was there with him, and Comey was there, and Clapper. The whole group was there. Brennan, they were all there in a room. Right here, this was the room. This is much more beautiful than it was then, but that's okay. I have nice pictures up. They came out of the vaults. They were in there for 100 years. This is much more beautiful. We have the Declaration of Independence now in the room, which wasn't here. I guess people didn't feel too good about putting it here, but I do. But you know what? If you look at those papers, they have them stone cold, and it was President Obama. It wasn't lots of people all over the place. It was them too. But the leader of the gang was President Obama, Barack Hussein Obama. Have you heard of him? And except for the fact that he gets shielded by the press for his entire life, that's the one they look. He's guilty. It's not a question. You know, I like to say, let's give it time. It's there. He's guilty. This was treason. This was every word you can think of. They tried to steal the election. They tried to obfuscate the election. They did things that nobody's ever even imagined, even in other countries. You've seen some pretty rough countries. This man has seen some pretty rough countries, but you've never seen anything like it. And we have all of the documents. And from what Tulsi told me, she's got thousands of additional documents coming. So President Obama, it was his concept, his idea, but he also got it from crooked Hillary Clinton. Crooked is a $3 bill. Hillary Clinton and her group, the Democrats, spent $12 million to Christopher Steele to write up a report that was a total fake report. Took 2 years to figure that out, but it came out that it was a total fake report. It was made up fiction, and they used that. Now, the one thing they weren't able to do was to, and probably the only thing I respect about the press in years is the press refused to write it before the election. They refused to put it in. The Steele report was a disaster. All lies, all fabrication, all admitted, an admitted fraud. She paid $12 million, and the Democrats, for that report to a wise guy named Christopher Steele. He wrote a phony report, and they wanted to get that report in before the election. And I'll tell you what, I talk about all the time, the fake news, how bad it is. But in this case, they wouldn't do it. They saw it, they read it, and they said, we don't believe it. And it was only after, substantially, like a month and a half after the election, that it got printed, and it was a big wisp. It was just like a bang of nothing, because the election had ended. If that report had gotten published by the New York Times or somebody, and I respect the Times for maybe only this, because they're crooked as you can be. They're a terrible paper, a crooked, corrupt paper. But for this one moment, they said, this is bullshit, we can't put this in. And neither could any other paper. Wall Street Journal's a lousy paper, very, very dishonest paper. As you see, I'm suing them for a lot of money because they do things very badly. It's got a nice name, but it's really, in my opinion, it's a terrible paper. And it can be corrupt. But just so you know, they didn't take the Steele report was the dossier. Remember the famous dossier? I called it the fake news dossier. The news wouldn't publish it. And I'm amazed. They had 2.5 months. It was finished. 2.5 months. That was supposed to be what was going to happen. It got published a couple of months after the election, and frankly, nobody cared too much about it. But that was a big thing. No, we caught Hillary Clinton. We caught Barack Hussein Obama. They're the ones, and then you have many, many people under them. Susan Rice, they're all there. The names are all there. And I guess they figured they're going to put this in classified information and nobody will ever see it again, but it doesn't work that way. And it's the most unbelievable thing I think I've ever read. So you ought to take a look at that and stop talking about nonsense, because this is big stuff. Never has a thing like this happened in the history of our country. And by the way, it morphed into the 2020 race. And the 2020 race was rigged, and it was a rigged election. And because it was rigged, we have millions of people in our country. We had inflation. We solved the inflation problem. But millions and millions of people came into our country because of that. And people that shouldn't have been, people from gangs and from jails and from mental institutions, people that we don't want in our country, and people that we're getting out, dangerous people. 11,888 murderers, many of them 50%, more than 50%, murdered more than one person. I hate to say this with such a distinguished guest, but you know, they asked me a question. I got to answer the question. No, Barack Hussein Obama is the ringleader. Hillary Clinton was right there with him, and so was Sleepy Joe Biden, and so were the rest of them. Comey, Clapper, the whole group. And they tried to rig an election, and they got caught. And then they did rig the election in 2020. And then because I knew I won that election by a lot, I did it a third time, and I won in a landslide. Every swing state won the popular vote. But I won that all the same way in 2020. And look at the damage that was caused.
How crucial is the ammunition hub that the U.S. plans to build in Subic and the Luzon corridor, considering that these will be built in areas that hosts strategic ports as well as military air bases?
You're talking ammunition?
Yes, the U.S. House Congressional Committee on Appropriations approved a budget.
Well, it's very important. Otherwise, we wouldn't have approved it.
Sorry?
Yeah, it's very important. Otherwise, we wouldn't. We need ammunition. We're going to end up in a few months, we'll have more ammunition than any country has ever had. We're going to have more missiles than any country has ever had. We're going to have all the speedy missiles. We'll have the speedy ones, the slow ones, the accurate ones, the ones that are slightly less accurate. We have everything. But we will have more ammunition than any country has ever had. It's very important to me. Okay. Go ahead, please, Red.
Sir, when you say that you're close to making a trade deal, what gaps remain? And for President Marcos, sir, I was just wondering, do you not think that perhaps the Philippines hosting U.S. missile systems could be considered escalatory by China, especially because they can strike defensively by China? Thank you.
Well, it's an honor to be with this gentleman. You know, I've known him, and I've known his family, actually, but I've known him. And I assume you're from the Philippines? Are you from the Philippines?
Yes, sir.
That's good. You're very lucky to be from the Philippines, right? It's a great place. But we're going to have a very good relationship. I mean, I know you had some problems with another president, and it was not your fault. It was the president's fault. And the country was maybe tilting toward China, but we untilted it very, very quickly. But, you know, you had a country that was tilting toward China for a period of time, and I just don't think that would have been good for you. You could deal with China, you should deal with China, but when I got elected, everything changed, and they came right back to us. Say it again? Yeah, Brian, go ahead.
Oh, Mr. President, I just wanted to piggyback off the
Sorry, I had a question to President Marcos.
Yes. I'm sorry, what was the question again?
It was about whether having U.S. missiles hosted in the Philippines could be considered escalatory by China.
All of what we consider part of the modernization of the Philippine military is really as a response to the circumstances that surround the situation around the South China Sea, and now what we used to refer to as Asia Pacific, which we have expanded now to the Indo-Pacific. And if we would certainly, like in any kind of military spending, we would wish that it wasn't necessary, but it is. And so that is what we are doing. And as an adjunct to the question about the ammunition production, this is actually, the United States is assisting the Philippines in what we call our self-reliance defense program, which is to allow us to be self-reliant and to be able to stand our own 2 feet, whatever the circumstances that occur in the future. And that the reason that we have encouraged more interaction with the United States is because it is, again, it is necessary. And it is not just with the United States. It is with all our neighboring countries and even countries as far afield as the Scandinavian countries, the EU. And so this is an ongoing process. And again, I will stress the point that we do this because we feel it is necessary.
And don't forget, just as tantamount to what you're asking, the Philippines were loaded up with ISIS and a lot of terrorists, and they were at a very, very dangerous point. And during my administration, we went in and we wiped them out, working with the Philippines, but we wiped them out. But if we didn't go in, I don't know what would have happened. I don't know who would be your president right now. But we spent a lot of time and a lot of talent on going into the Philippines and wiping out terrorists. They had a tremendous problem during my administration, and we cleaned it up. We got them out, and now you really have a good, solid country again.
I believe so. Yes.
How can you
Mr. President, I want to follow up on the housing question.
Yeah.
We've got no tax on tips, no tax on overtime, no tax on Social Security. How important is it we have no tax on home sales, capital gains, to unleash the housing market in this country?
Well, we're thinking about that, but would also unleash it just by lowering the interest rates. If the Fed would lower the rates, we wouldn't even have to do that. But we are thinking about no tax on capital gains on houses. And I'm very impressed that you asked that question because nobody knew that.
Well,
how did you find that out? That's very.
I wonder why there's somebody very close to
There's
that.
a leaker. There's a leaker.
I've also got a question. I find it a very interesting world that we know more about two people at a Coldplay concert just hours after that viral video than we know of Thomas Crooks 1 year after attempting to assassinate you. What is holding back the investigation on Thomas Crooks?
Well, they've reported to me and they've told me things, and they really say they haven't found anything that was abnormal. I would say this: the Secret Service was very brave because they were right there and they jumped on me. They made a mistake. They should have had somebody on that roof, and they should have had communication with the local police, who also, I mean, they did a very good job, but they made some mistakes, and we have a whole different group of people now. I don't think anything can happen, but I think we have the best people anywhere in the world right now, and I think they've learned. And they went into him very, in great detail. They gave me the whole thing, and what can I do? They say that it was just a nut job that was looking to do this, and I spoke with the FBI, the new FBI. I spoke to the FBI. If it was the old FBI, I wouldn't have believed a thing they said, because the old FBI under Comey was crooked as hell. He was one of the most crooked. Everybody should read the Horowitz report. Unfortunately, Bill Barr didn't use it. But the Horowitz report, not appointed by me, it was a report on Comey and the FBI. It is one of the worst shots at a human being I think I've ever seen. In fact, the New York Times did an editorial that was one of the worst editorials I've ever seen about anybody. That was about Comey. You ought to go back and get, and Barr didn't use it because he didn't have the guts to use it, or something happened. I don't know. Too bad. He went to Mr. Durham instead of doing the Durham. All they had to use is the Horowitz report, and I always felt badly for Horowitz, frankly, because he's a Democrat, I guess. He was appointed by a Democrat, but that report has gotten lost, and it shouldn't be lost. You should all go back. It should be mandatory reading. Go back and read the Horowitz report on Comey and his cronies, and you'll see exactly. We're going to add that to all the stuff that we found. It just confirms it. But what we found is even more so. Now, we found absolute, this isn't like evidence, this is like proof, irrefutable proof that Obama was seditious, that Obama was trying to lead a coup, and it was with Hillary Clinton, with all these other people, but Obama headed it up. And, you know, I get a kick when I hear everyone talks about people I never even heard of. It was this one. No, it was Obama. He headed it up. And it says so right in the papers. Got everything. Got everything. This is the biggest scandal in the history of our country. And it really goes on to even the auto pen, because it all relates to the same thing. It all started, the same sick minds. You have an auto pen, which is a tremendous, well, we don't have a president. We have an auto pen that signs everything. I'll bet you sign everything. You don't have auto pens. Everybody, who doesn't sign? You're the president of a country. But it's all that whole thing leading right up to the end of it is the auto pen. And the auto pen was used by people, and Biden knew nothing about it. Biden knew nothing about it. They were signing documents that he knew nothing about. As an example, they released the Unselect Committee of Liability. The Unselect Committee spent 2 years grilling everybody, and then they destroyed all the evidence. You know why? Because the evidence made them guilty, and he gave them all a pardon. The Cheney, all the scum that was on the Unselect Committee, Cryan, Adam Kinzinger, and Democrats, and he gave them a pardon. Do you have something else, guys?
I was just going to add one more thing on Adam Schiff. Director Pulte reports that Adam Schiff claims he lived in a one-bedroom apartment. Now, how does a family of four, and you're a developer, a very successful developer, how does a family of four live in a one-bedroom apartment?
No, it looks like Adam Schiff really did a bad thing. They have him. Now, let's see what happens. It's not up to me. It's not up to, I stay out of it purposely. But it's mortgage loan fraud. It's a big deal. He defrauded banks and insurance companies and the federal government. But it's very simple. It's mortgage loan fraud. And you're right. That's a lot of people to live in a one-bedroom apartment, right? But he put it down. But he has a lot of other things far worse than that. So, no, Adam Schiff, they have him 100% on mortgage fraud. Now, if there's anybody else in this room except you would have no problem. But anybody else in this room, you'd have a problem. I'd have a problem. Yeah, please.
So there was a hearing yesterday in the Harvard case. Would you allow Harvard to get their federal dollars back as a part of any agreement with the administration?
No, I'm not giving. Harvard's been given $7 billion. Can you believe it? By the $7 billion, and we want money to go to all universities, not Harvard. Harvard got more than anybody else. They have $52 billion. They get huge tax incentives and tax breaks on that $52 billion. But they have $52 billion, and they got $7 billion over a short period of time. And we have a very hostile judge appointed by Barack Hussein Obama, a very, very hostile judge who knows exactly right from wrong. But you know, we expect to win it on appeal. She hasn't given a decision yet, but she's very hostile, and she was put by Barack Hussein Obama. And generally speaking, anybody that does that, we're going to have problems with. So we don't expect to have. We won the case yesterday. Anybody that was there, that was a neutral, would say we easily won the case. But a lot of the case, and a big part of it's going to be how much money Harvard gets in the future. That's not part of the case, and they're not going to get very much.
Mr. President, where are we in terms of negotiating about the reciprocal tariff? How far are we
with
from the Philippines? Yes, sir. How far
are you from the Philippines?
Yes, sir.
Good.
From the Philippines. How far are we from achieving?
Well, it's tough. He's a very tough negotiator. So far, we're not there because he's negotiating too tough. In fact, I used to like him better than I do now. He's too tough. But we'll probably agree to something. But he's a strong negotiator. He loves your country.
Mr. President,
when are you coming to the Philippines, sir?
You talked a lot about the severe consequences that those who were involved in the Russia hoax must face. In your view, sir, what are the next steps now that these documents are out there in Tulsi Gabbard?
Well, the Justice Department would have to act. And we have a very competent, very good, very loyal to our country person in Pam Bondi, very respected, and it's going to be her decision.
Just a follow-up to that, sir. Kristi Noem was in New York City visiting an off-duty CBP officer who was allegedly shot this weekend by an illegal alien who came into the country during the previous administration.
Right.
What is your message to any local leaders who continue to push sanctuary city policies after this nearly tragic incident?
So the only thing I don't understand, because you like to understand things and we're all smart people and all, but why would they allow 21 million people into our country, unvetted, unchecked? You don't allow it. You wouldn't allow people in. He's tough. No, the country's run properly. Biden and his group of thugs, and I don't think it was Biden, I think it was the people that surrounded that beautiful Resolute desk right behind you. They allowed 21 million people, probably much more than that, and many of them came from jails and gangs and drug dealers and mental institutions, insane asylums. Many of them are very sick. 21 million, probably 25 million, probably even more than that. And we're getting them out. Many were murderers, as I said. They killed people. Many killed more than one person. Stone cold murderers. I don't understand why they would have allowed that. There's only two reasons. The vote. Is they want voters? That's one reason. I don't think they would have done it for that because they cheat. You know, they're so good at cheating, they don't need that. But the vote, and the second reason is they hate our country. I think they hate our country. I actually do. And it's the biggest problem. I mean, much of our time is spent with, you know, we have the strongest border anywhere in the world now. Maybe even stronger than your border, if you can believe it. We have no people came in last month, 0, which is pretty amazing. I'm not even sure I can believe that. But liberals are the ones that do that calculation. So, but we had no people come in. A year ago, we had hundreds of thousands of people come in. Hundreds of thousands of people. And they flowed in. And if it wasn't for the election, it would have been millions of people came in last year. So millions of people prior to election time, they allowed millions and millions of people to come into our, I mean, you saw it. They'd open the gates. If you took an Alabama-LSU football game that holds 128,000 people, I was there, 128,000 people, and I liked them and they liked me. But if you took that and doubled it, that's what used to flow into our country on a daily basis. It's not even believable. And we're getting them out, and we're starting with the worst ones. And we had a man shot yesterday, a police officer who's great gentleman, shot right here in the throat. Probably won't be able to speak again. But he was brave, and he shot the other guy, and they ended up getting him. And you saw the scene where his friend took him to a hospital and dumped him down on the sidewalk. The whole thing was crazy. But why would anybody do to our country what these Democrats have done? And honestly, we can never forget it. We can never forget it. What they have done, the damage that they've done to America is very, very sad. Thank you very much, everybody.
Looks like that's what we're going to get from President Trump live in the Oval Office there for you after spending some time with the president of the Philippines. If you were listening here on Bloomberg Radio, you might not have known that he was actually sitting right there, President Ferdinand Marcos Jr. at the White House for a working lunch, a bilateral meeting that will involve trade. And the president did speak briefly, at least, about that, talking to their relationship, saying it will be a very good relationship. The country, the Philippines, he was saying, was, quote, maybe tilting toward China, but we're untilting it, unquote. Talked about a lot more as well with the president. This was essentially a Q&A in the Oval. They didn't do much more than some very brief opening remarks. On Jay Powell, I think he's done a great job, bad job rather, but he's going to be out pretty soon anyway. In 8 months, he'll be out. This follows a conversation earlier, of course, with Scott Bessent saying on another network that it was not the best time or justified time to be firing the chair of the Federal Reserve. President Trump saying people are not able to buy a house because this guy is a numbskull. Spoke quite a bit about Russia interference in the 2020 or the 2016 election here. The witch hunt, he says, you should be talking about when he was asked about Jeffrey Epstein is that they caught Obama absolutely cold. Tulsi Gabbard did, he said, trying to rig the election. We're going to get to all of these and unpack what was essentially a half-an-hour-long session in the Oval Office today with Mike Shepard, who's with us live in Washington right now. And I'll tell you, Mike, you've seen a number of these dances in the Oval. They each sort of take on their own flavor here. Just to get through this, by the way, there was actual business at hand, and that is the threat of tariffs to be going in place against the Philippines on the 1st of August. That's, of course, the deadline for reciprocals. Threatened 20% tariffs on the Philippines. And the president indicated on the way into this meeting that he expected they'd cut a deal today. Is that the actual news that comes out here?
He thought so. Well, it's unclear whether they will, because he praised the president of the Philippines as a tough negotiator. And he also let slip that maybe I like him a little bit less now than I did before, indicating that maybe the Philippines were drawing a harder line than Trump maybe would have wanted. And once again, we are seeing the president sort of taking this point position in trying to engineer these trade deals. And he's even said that, you know, a letter from him declaring a tariff rate would be a deal, never mind what the counterparty or recipient might have to say about it. So we'll have to see what develops later today, what the remaining sticking points really between the U.S. and the Philippines, which it's important to note is a close U.S. ally and a crucial bulwark against China. The president of the Philippines did make clear that, look, they are trying to balance between the ties and the long-standing relationship with the U.S., but also the proximity to its neighbor, China, which it does so much business to, and they have to strike as a sovereign nation their own balance, and he tried to make that clear. But Joe, he really didn't get too much of a word in edgewise, given everything else that
we hardly heard his voice. We did get to Jay Powell, as I mentioned. This was actually the first question that was asked of the president. It has been quite a saga the past week with the president's remarks, Scott Bessent's remarks, and so forth. Here's the latest from Donald Trump on the chair of the Federal Reserve.
I think he's done a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out. But I call him too late. He's too late all the time. He should have lowered interest rates many times. Europe lowered their rate 10 times. We lowered ours none. And it's causing a problem for people that want to buy a home. Look, our economy is so strong now, we're blowing through everything. We're setting records. You know that. You see that. And whether it's the Philippines or anyone else, we're setting records at levels that nobody's ever seen before. But you know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high, and probably doing it for political reasons.
Interesting take there. Weigh in on the political reasons if you want, Mike Shepard, but that does not sound like a president who's about to fire the Fed chair.
No, he stopped short of even calling for Powell to resign. And he indicated that maybe he is willing, after all, to let the clock run out on Powell's tenure. And we already know that there are a handful of contenders to possibly succeed Jerome Powell as the Fed chair. Of course, Kevin Hassett, the White House NEC director, Scott Bessent himself, the Treasury Secretary, Kevin Warsh, former Fed board governor. All these officials' names have been in the mix, so he may be thinking ahead. But in the meantime, he is trying to set the stage for whoever might succeed Powell by indicating that, look, the price of entry is lower interest rates and moving quickly in this direction. He pointed to the European Central Bank and its repeated rate cuts in recent months, saying that, look, the U.S. is behind, and he once again used the too late moniker for Jerome Powell to talk about his frustration on this front. And he tried to translate it in real terms that the viewing public could understand. Housing. It's becoming harder for people to buy a home because of high interest rates that have persisted for the past couple of years, as we've seen, Joe. And he also talked about the cost to the U.S. government. He talked about the fact that interest rates where they are right now could be costing the U.S. government $1 trillion on its debt payment.
That's been a big angle for the White House recently. Peter Navarro rolled out that argument right here at this desk a couple of days ago. But you wonder if Scott Bessent is the one who pulled the president in off the ledge here in the comments that he made earlier, that he sees no reason for Jay Powell to step down. Quote, "There's nothing that tells me that he should step down right now, almost as if he was speaking to Trump himself.
It really is a signal from, what some may view as a more rational wing within the White House trying to say, look, let's just run the clock out. But at the same time, you heard both the president and Scott Bessent today once again dialing up their criticism of the Fed chair over the handling of other areas of Fed policy, not related to monetary policy, Joe, but just the renovation that they've been doing at the headquarters, which has gotten much more expensive, but not unlike many other building projects that we've seen.
A little more expensive than you bargained for. So let's get to sort of the bizarro portion of the program here. There's been a lot of talk about Jeffrey Epstein. There have been many questions the president has been asked, and he's taken a lot of different angles on this to try to tamp down the conversation, to put this to bed. He has now turned to what he likes to call Russia, 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 to get into this, right? 2016, accusations of Russian interference. Tulsi Gabbard just the other day said Russia couldn't have actually had the ability to change votes, which I don't think anyone in the Obama administration suggested. But he said the witch hunt you should be talking about is that they caught Obama absolutely cold trying to rig the election. He referred to him by his full name, Barack Hussein Obama, repeatedly, invoked the Clintons, Comey, and other names back from the past. This does not sound like something he's about to let go of. Will we actually see proceedings, or are we just talking?
For now, it's talking, but it's a lot more talk. And we have seen this really kind of take hold since the end of last week, where he began to invoke what he sees and others who are alive with the president see as this possible role by former President Obama and former President Biden, former Secretary of State Hillary Clinton, all somehow conspiring, all one big conspiracy to deny Trump the presidency in 2016, 2020, and again in 2024. He's not offering a whole lot of evidence, certainly not in the Oval Office, and yet this is the kind of talk that could get his base, which has been riled up about the lack of what they see as transparency and a failure to deliver the full Monty on the Epstein files. This is a way to get them perhaps focused on something else.
Happening here, I guess. The Office of the Director of National Intelligence, Tulsi Gabbard, put out a news release that's titled New Evidence of Obama Administration Conspiracy to Subvert President Trump's Victory. She refers to a years-long coup against President Trump, who, by the way, just now accused Barack Obama of treason. You've covered Washington for a while. These are big words we're using here.
Those are big words, and some of those words were actually used in the direction of President Donald Trump following the January 6th assault on the Capitol in 2021, following his defeat in the 2020 election, and right before Joe Biden was inaugurated. So there is quite a bit of push and pull, and it does also echo perhaps some of the claims being made against one of his allies abroad, the former president of Brazil, who is actually being prosecuted in connection with a possible coup attempt against his successor in early 2023. So, there are a lot of threads to pull on this, Joe, and it doesn't sound like the president is ready to let this go, and his advisors certainly aren't either.
A remarkable back and forth with reporters. The White House press corps, of course, chosen by the White House itself. Mike Shepard, thank you so much, as always, for helping us walk through that. It was quite an experience. All right, Nathan Dean is going to come on in next here on Balance of Power, but first we want to update Wall Street. We haven't even heard from Charlie Pellet next. He's got the latest on the markets from World Headquarters in New York. Charlie?
Thank you very much, Joe Matthew. We are looking at the Dow Jones Industrial Average higher right now. The S&P, NASDAQ, they are both declining. A slide in several big techs, dragging stocks down ahead of a high-stakes earnings season. Alphabet, Tesla, they both report tomorrow. Of the S&P 500 companies right now, I'm looking at 379 higher and 120 lower in the S&P. So the S&P, most stocks higher there, but the index down 6 now, drop there of 0.1%. The Dow up 53, up 0.1%. NASDAQ trading lower by 90 points. NASDAQ Composite Index down right now by 0.4%. On a down day for the S&P, we've got the Russell 2000 Index higher by 0.5%. Our Mag 7 Index is also moving lower now. We've got the Mag 7 Index down by 0.7%.
0.7%. The 10-year, 4.33%. The 2-year, 3.82%. The 30-year, 4.89%. In the meantime, the price of gold up $31, $34.28 right now on the precious metal, up by about 0.9%. And a retreat for crude now below $66 a barrel. WTI trading lower, down now by just about 1.8%. So again, the Dow higher, S&P, NASDAQ both lower, keeping an eye on Microsoft, which is accusing of Chinese hackers of exploiting vulnerabilities in its SharePoint software that have led to breaches worldwide. Also, Kohl's shares, they are surging now. KSS on the ticker, that stock up by 38.6%, minting it as the newest meme stock amid an influx of mentions by retail traders on social media. Again, Kohl's surging 38%. Yesterday, we had Open Door Technologies jumping 42%. Today, Open Door up by 4.8%. Recapping, S&P down 8%. A drop of 0.1%. Balance of power continues now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie. Good to see Charlie Pellet at World Headquarters, and he will be back not too long from now to update the Tuesday trade here as we watch Bitcoin rise more than $2,000. It's a big move, almost 2% here. Back above 119,000, and I bring this up because crypto is in the air here in Washington, D.C. Remember, we just had Crypto Week. By the way, have I said Happy AI Week? We'll get to that in our second hour. The White House rolling out AI regs today. The Federal Reserve rubbing elbows with Sam Altman. But no, this is a crypto market structure bill, something you've heard us talk about called the Clarity Act. And the idea is that you pass the Genius Act, the stablecoin bill, and it would unlock new fortunes for the rest of the industry here. The problem is a lot of Democrats have an issue with crypto right now because of the president and his family's own personal financial involvement in the industry. But Senate Republicans are out with an initial discussion draft of the digital asset market structure legislation that we call the Clarity Act that passed the House last week. I guess they'll have their own name for it in the Senate. This is why we turn to our friend Nathan Dean. I'm glad we got through things at the White House so we could spend some time with the senior U.S. policy analyst at Bloomberg Intelligence. Nathan, great to see you. We start talking about a discussion draft. That doesn't really sound like something about to become law. Where does this actually stand?
Yeah, so this is the Responsible Financial Innovation Act. So
that's the real name.
Yeah, RFIA. But again, it's a discussion draft, okay. So everything can change.
We need a better name.
And so, what we're telling our clients is, look, this is a discussion draft. This is the Senate Banking Committee. So the Senate Ag Committee still has to put their hands on this because remember, banking has authority over securities, right. Ag has authority over commodities. Right. So this is work that they're doing to enhance the Clarity Act. And essentially what they're doing here is that they're creating this new form of ancillary asset. So you've got securities, you've got commodities, now you have this ancillary asset. Now, the crypto world, most of them want to go to this commodity route because, and we agree with this, is that the CFTC would have much less onerous regulation than if you were in the securities world or with the SEC. But again, this is just a discussion draft. It's not great to release this right before you go on August recess, but, we do anticipate that, we will see some committee work in September while the government funding fights are going on. But we're telling our clients is, look, this needs a lot of time to cook. Yeah. And so I wouldn't be surprised if this gets pushed off to the first half of next year.
How much of that has to do with the fact that Democrats and Republicans seem to be reaching new lows when it comes to trust? There's talk already now about a potential government shutdown that I'm going to ask you about maybe at the end of September because of the clawbacks, the rescissions, the big, beautiful bill. Democrats keep this from happening?
So, when it comes to the crypto bill in particular, I just, there were some nuggets in this bill, the discussion draft, that made me think that the Republicans were trying to reach out to the Democrats and say, specifically on bank secrecy and anti-money laundering. Okay. But there's just not enough here that the Democrats can say, look, I'm very comfortable with this. But I still think something can get done. I'm a little bit out of consensus on that. But I think this bill needs to actually be brought back a little bit and needs to be put in a way that the Democrats can say that whether it's the SEC or the CFTC, somebody at the regulatory agencies is spending spending a lot of time working on this, and I'm just not seeing it there just yet. But again, time can tell, and a lot of the other aspect of this is President Trump's ties to the crypto sector.
That's right.
Just Democrats are not going to be happy with that, and I'm not sure how you get past that.
So those are real headwinds right now. But I mean, assuming you see this happening, assuming it does happen, the argument is that you want to start buying Bitcoin and other crypto because it will then bring an institutional wave of buying. Is that actually something investors can bank on?
Well, let's look at the Stablecoin Act. The Genius Act passes last Friday, or President Trump signs it into law. We were listening to bank earnings this week and last week, and there were a lot of banks out there that said, look, we're going to actually get into the stablecoin base. Circle, for example, is down right now significantly, and I think a lot of it's based off of competition concerns. Wow. And so you're starting to see a lot of people saying, look, now that we have clarity, now that we know that we're not going to get hit with an enforcement action, we're now going to jump into this space. I think right now for the firms like Coinbase and Robinhood, they want this type of clarity. They'll be more than happy to pay for those compliance costs, if you will, for something like the Clarity Act to pass. So I think you will see more companies get into the fold, but then you'll see some consolidation as well.
We've already got ETFs, though, right? We've got a Bitcoin ETF that was a big deal when that first debuted. What else do we see? Companies, banks actually putting this in their treasury. What is it that puts this over the top? What form would it take?
Well, I think it's also let's start with the stable coins. The stable coins, in our view, is more of a back office function. Look, you're going to use your stable coin to conduct business transactions in the same way you would do FedWire, or you just take your phone and tap in and tap out. When it comes to crypto, on the other hand, you're going to have Bitcoin as an asset that you eventually hold as either a gold reserve or a hedge against something, to take your pick. And so I think this idea is that, when you have 30,000 different types of cryptocurrencies out there, there's probably just going to be like 3 to 5 of them that really, really take off. I mean, it's just, but I think, again, institutional adoption, we saw this with the ETFs. Once they were approved, more people went into them. When you get to the idea that Goldman Sachs and the JP Morgans and the Michael Saylors are enhancing their Bitcoin treasuries, for a retail investor, that might be good news.
Does stablecoin actually increase the argument for Ethereum, since they're technologically related somehow, Ether and stablecoin? I realize Ethereum and Ether are two different things, but there's an argument right now that Tom Lee is forwarding, for instance, this is the next Bitcoin. This is the catch-up trade.
Well, I mean, look,
because of stablecoin.
Yeah, I mean, look, stablecoins are going to most likely enhance people's familiarity with crypto. If banks and non-banks really come out with a plethora of stablecoins in the next few years, you're going to see more people trying to get into cryptocurrency. And if it's not Bitcoin, Ethereum is the next one.
Sure.
You have Solana. And so, again, you go to this idea of who has the market, who has the open interest, if you will, right now, and it's Bitcoin, Ethereum, and Solana. So I definitely could see that argument, but again, time will tell.
So we have a DEA administrator, something that we've talked about a bit. Cloture went all right. It was a party line vote, 50-47 for President Trump's pick here, Terrence Cole, to run the DEA. And marijuana stocks have been moving on this because we've talked about this, some of the comments he's made about simply examining the idea of rescheduling cannabis. Promises on the campaign trail have not been kept when it comes to the legalization effort. What's this gentleman going to do with the DEA?
So there's a lot of hope right now amongst the marijuana investors, because if you look at their index, I mean, it's almost just downhill since 2020. I mean, we're talking significantly downhill. So a lot of retail investors in the marijuana space are hoping for this type of good news, because these stocks, as we've talked about before, they jump up 10, 15, 20% on any type of news tidbit coming from Washington. But at the end of the day, what we've put, and we just put out a note to our clients, essentially saying is that we don't see any evidence from Terry Cole that he would actually support this. He's very anti-marijuana in his past role in the state of Virginia. And, again, we consistently hear the DEA staff are not on board with this. And so, yes, President Trump did say that he would look into this, but there's a big difference between looking into it and actually moving forward. I'm not going to say it's not going to happen, but just right now, I see no evidence that they're going to move forward with rescheduling.
It's interesting. The old MJ ETF is up almost 3% right now, just about to get back above $22. Investors think they know something. They're just trading on a headline. You're telling us better of it.
Well, there was a lot of chatter last week amongst the community that the reschedulization was imminent.
Yeah.
In fact, we saw some anti-reschedulization notices coming out from some of the anti-marijuana groups. So there must have been something going around that people thought that this was going to happen imminently. But again, I just say that Terrence Cole has said that he would look into it.
Yeah.
And I just haven't seen any evidence
He might
that
not
he'd say that
like what he sees when he does, right?
Exactly.
That wouldn't be completely off brand. And as far as the White House goes, the president not asked about this. I haven't heard a peep from him on this issue since he's been in the White House. Have you?
Well, it pains me to say this because I like covering this issue, but it's not exactly the most important issue.
No, it turns out not to be.
You know, so when you have things like tariffs and obviously, you know, the chairman of the Federal Reserve, you know, it's kind of hard to get marijuana FaceTime with.
You should hear some of the questions he gets, though, Nathan. I don't know. Sometimes it might actually be a little more important than what we heard about some of the interior decorating, for instance, in the Oval Office. Great to have you, as always, Nathan Dean. Find him, Bloomberg Intelligence, on the terminal and online, where they do so much great work and great analysis for us. You're the client. You get to talk to Nathan and listen to him every week here on Balance of Power. I'm Joe Matthew in Washington. We'll assemble our panel next. We started today a little off kilter with some live banter in the Oval Office, and we're going to keep talking about what's happening on both ends of Pennsylvania Avenue, including what appears to be the decision to go home early. In the House of Representatives, a late night in the Rules Committee did not generate a rule to do anything, and it all brings us back to Jeffrey Epstein. Democrats are making noise, and we'll have it next.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, S&P, NASDAQ, they are both declining. Right now, the S&P is down 10, drop there of 0.2%. A slide in several big tech names, dragging stocks down ahead of a high-stakes earnings season. Tomorrow, we will be hearing from both Tesla and Alphabet. Microsoft, meanwhile, is accusing Chinese hackers of exploiting vulnerabilities in its SharePoint software that have led to breaches worldwide. S&P down 10, a drop now of 0.2%. The Dow up 42, up 0.1%. The NASDAQ is down 125 for NASDAQ, a decline of 0.6%. 10-year 4.33%, the 2-year 3.82%. Spot gold up $32 the ounce, 34.28, up 0.9%. And West Texas Intermediate crude down 1.5%. WTI now at 66.20 per barrel of WTI. Bitcoin, meanwhile, rallying 1.7%, 118,922 on Bitcoin. So it is a mixed day right now. Dow higher, S&P lower. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments. She says investors are focused on tariffs and possible offsets.
They're seeing some of the hard data look a little bit better, weekly claims, industrial production, retail sales, and they're thinking, okay, there's enough benefit coming out of the reconciliation bill and better hard data to offset what we're going to see coming out of the tariffs.
Victoria Fernandez of Crossmark interviewed this morning on surveillance. You can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Lockheed Martin reporting earnings this morning that fell short of analyst estimates. The stock is plunging by 8% right now. Also reporting RTX Corp, it lowered its full-year profit outlook as the company digests the impacts of tariffs that have roiled the aerospace industry. RTX down 1.7%, but heading in the other direction. Northrop Grumman, it has raised its earnings guidance for the full year after getting a boost from its Sentinel ballistic missile and B-21 bomber programs. Northrop Grumman up by 8.7%. Recapping, S&P down 0.2% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Joe Matthew.
All right, Charlie, many thanks. Live from New York, Charlie Pellet on the markets for us every day here on Balance of Power. I'm Joe Matthew in Washington. Great to see you here on Bloomberg Radio, satellite radio, channel 121 on Bloomberg Originals and YouTube. Find us now, search Bloomberg Business News Live. Maybe you're already there, as we did bring you into the Oval Office at the top of the hour here for a conversation between the president and the White House press corps today, one that quickly went from Jay Powell to some older names in the conversation. Obama, Comey, Biden, Clapper, Clinton, as Donald Trump said, reaching back to prior administrations and accuse the former president, Barack Obama, as he referred to him repeatedly, Barack Hussein Obama, of treason. And by the way, this is when he was asked about Jeffrey Epstein. This is the latest, it seems, effort to obscure that story and point reporters to another. The president saying the witch hunt you should be talking about is that they caught Obama absolutely cold, trying to rig the election. He says they did it in 2016, 2020, very criminal. This all following word days ago from Tulsi Gabbard, the DNI, a series of reports aimed at scrutinizing years-old intelligence community conclusions about Russian interference. She said that Russia wasn't able to affect the votes, and apparently this was an inside job, according to the DNI. We're going to talk about this. I don't want to dwell on this for the rest of the hour here, but it just happened in the Oval, and it does seem to be a curious way to get around the Epstein story as we assemble our political panel. They're both with us. Jeannie and Rick, Bloomberg Politics contributors. Rick Davis, Republican strategist partner at Stone Court Capital, and Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress. We talked about this effort, this sort of wag the dog effort yesterday on the program, Rick, and it seems to have reached new levels today, accusing the former president of treason and in fact saying it's time to go after them. That was the language that he used. Whether it was right or wrong, he said, to let Hillary Clinton off the hook. It's time to go after people. Obama's been caught directly. Does any of this matter?
Well, I guess he thinks it matters to them because, as you point out aptly, this is all just a shakedown of his own base to get them to think about something other than Jeffrey Epstein. I mean, they want to shut it down at the White House. And as you've seen, they've done the same thing in the House of Representatives, where Speaker Johnson said, hey, let's take a vote and let's get everything out. And that's been the orthodoxy of Republicans since Donald Trump took over the party is, let's expunge everything the government has on Jeffrey Epstein. And literally overnight, he gets the word from the White House, shut it down. They vote, kill the rule, and send everybody home. I mean, we now have the Epstein extra vacation days. So it's all obsessive compulsive behavior on Epstein.
It's incredible, Jeannie. Rick is right. I mentioned this briefly, but House Republicans kind of pulled the cork on the rest of the week's work here last evening, stopping work on all major legislation ahead of the summer recess. They might go home, we're told, as early as tomorrow. Maybe they do some suspension votes, but basically all the legislation involving immigration, environmental, that was supposed to get a vote this week is now on ice as Democrats threaten to force a vote on releasing the Jeffrey Epstein files. Of course, we've got another action by Tom Massey in Ro Khanna to force a vote on this, a discharge petition. Jeannie, is everything in Washington, this is both ends of Pennsylvania Avenue, now revolving around the Epstein story?
It absolutely is. And what's stunning about this is we are, I think, now 3 weeks, maybe 2 weeks into this story. And this is the longest story I can remember that Donald Trump has not been able to distract attention from. And he has tried mightily. And, you were just talking about that press conference with the president of the Philippines. And I'm thinking to my students and thinking, so many of my students, names like Comey, Susan Rice, those, that's like me talking about, I don't know, somebody back from the 1930s. It's just meaningless to new voters today. And Donald Trump seems to be living in the past and, he's trying to rev this up. The problem as you look at Mike Johnson is this is really about the Democrats pushing for this vote. This is about the Republicans, people like Ralph Norman, who voted for it in the Rules Committee, and other Republicans last night who said, listen, Speaker, we aren't going to vote against it again. So you either shut this down, we're not going to vote against it, and it'll get to the floor. So this has much more to do with the fact that Republicans for years have promised to open these files. And all of a sudden on, a dime, because Donald Trump doesn't want it, they have tried to spin it around. People like Andy Biggs. Well, that's a hard thing to turn off. And one thing I was chuckling about as Donald Trump was going on and on, does he think that his base cannot keep two conspiracy theories in mind? They've been doing it for years. Russia, and Epstein. They can do both. I don't know what he's thinking.
We can do this, says Jeannie. Rick, you saw what happened to the Wall Street Journal. We discussed yesterday that Donald Trump was filing suit against the Journal, its parent company, News Corp. That's Rupert Murdoch's company. Now he's barring Wall Street Journal reporters from the press pool that will cover his trip to Scotland at the end of the week. Does this kind of thing bother you or not?
Yeah, look, I mean, it's just vindictive behavior. It makes the president and the office of the president smaller as a requirement. I mean, like, he can't find a better outlet for news than the Wall Street Journal, the New York Post. I mean, these guys all want to write good things about him and his economic policies, but now he's not even going to give them a chance to do that. It's one of these things that has always bothered Donald Trump is hypersensitivity to media broadcasts when it's not even how most of his voters get their news. They're not reading the Wall Street Journal. It's almost irrelevant to them. And yet what's really should be bothering him is the fact that the MAGA, sphere of media outlets are doing nonstop Jeffrey Epstein reporting, including talking about the Wall Street Journal report. So, he can bother Wall Street Journal all he wants. He can pick on CNN and all the other news agencies that occupy space in the White House. But at the end of the day, the people getting his voters riled up today is the MAGAverse, not the mainstream media.
Well, maybe that's why this is feeling kind of personal when he gets upset about this. I can't imagine what it was like to be President Marcos in the Oval Office. I think he got 3 words out when the Q&A got going, Jeannie. But to give you a sense of where the president's mind was before this bilateral meeting in the Oval Office with the press corps, he was on Truth Social. This is just moments before he greeted the president of the Philippines in the West Wing, Jeannie. Donald Trump on Truth Social, quote, "The word is, and it's a strong word at that, Jimmy Kimmel is next to go in the untalented late-night sweepstakes, and shortly thereafter, Fallon will be gone. These are all people with absolutely no talent who were paid millions of dollars for, in all cases, destroying what used to be great television. It's really good to see them go, and I hope I played a major part in it." Jeannie, that was his final thought before he greeted a world leader today in the West Wing. What does that tell you?
It tells us he is desperate to try to change this narrative. And there's been a lot of talk on the right wing and in the right wing sphere and the media about the late night since Stephen Colbert's cancellation. And he is trying to jump on that as much as he is trying to jump on the story. He talked about Adam Schiff. He's talked about, as you mentioned, Barack Obama. I mean, the list goes on and on. He's really desperate to try to change the narrative. And I think the Wall Street Journal did him something of a favor with that story, because it was a moment in the last few days when the right wing came together against the boogeyman they love to, look down on, which is the media. So that was something, that sort of, you put some wind in his sails, and he tried to go back in that again today with the Wall Street Journal and the New York Times, corrupt, everything else. The problem is the real issue is that when this comes from inside the House, you can't tamp it down the way the president always has. And that is what is troubling him. He's got to get his supporters, his elite sort of media podcasters and others to change the narrative. He's had some success with people like Charlie Kirk, but others are sticking with it, including Congress people, because they're hearing from their base. CBS poll, 89% of folks say they want the government to release the files. And when the argument is just release it, very hard to distract people from that.
Well, God forbid we obscure the Epstein story with actual news. Rick, we should let people know that there is, in fact, a conversation happening between 2 world leaders today inside the White House. The President, Trump, that is, threatened 20% tariffs on the Philippines. There is a hope, as he said earlier when this all began, that they cut a deal today. Would it be meaningful if they did? Do the markets care about a trade deal with the Philippines?
Yeah, I think that it's an incredibly strategic place in the world for us. I just think it's a historic moment for President Trump meeting with Fidel Marcos's son, who's now president of the Philippines. I mean, history has really turned a page, and even though he's been in office for a long time, I mean, this is a moment in time where we are now recognizing that the Philippines, like during the Vietnam War, may be one of the most important countries who are an ally for us in the region. The Indo-Pac is the most dangerous place in the world. We don't talk about it every day because we have other things like the Middle East and Ukraine. But at the end of the day, the only real threat of a world war is China versus the United States, and the Philippines sits right in the middle of that.
Pretty important partner, then, I think we can argue, Jeannie, despite the conversation that was had in the room. It involved very little about the Philippines. How important would this development be when it comes to trade? We can talk about Russia, or Jay Powell all day long. None of those stories are developing. There actually could be a trade deal today. As the president says, we're going to have a good relationship. The country was maybe tilting toward China. We are untilting it. In our remaining moment, Jeannie, can he untilt the Philippines?
He can absolutely try. I mean, geographically, historically, they're right there. But it is an important moment. And if we get a trade deal with details, I would add, unlike the other two we've gotten, that would be critically important and a sign the administration is not close to their 90 and 90 days, but moving in the right direction. And of course, the Philippines, critically important. But to your earlier point, Joe, I'm not sure I heard the president of the Philippines say more than, a sentence or two at the most. And so largely overshadowed by everything else going on.
Well, hopefully we'll learn more about what they discuss when we get the readouts from the White House and from the Philippines. Much more with our panel coming up. Rick Davis and Jeannie Shanzano stay with us in our second hour, as always. Bloomberg Politics contributors on the case as we turn our attention to AI Week. It starts tomorrow at the White House. More on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The White House set to embrace artificial intelligence. Welcome to the Tuesday edition of Balance of Power as the Trump administration prepares to unveil a plan to push American AI technology around the world and also crack down on states that put forth restrictions on the technology. I'm Joe Matthew in Washington. Thanks for being with us here on the Tuesday edition of Balance of Power. We'll get an update ahead from Bloomberg Washington correspondent Tyler Kendall with her view from the White House following a bilateral meeting between the president and the president of the Philippines. We'll also have insights from Ann Neuberger, the former Deputy National Security Advisor for Cyber in the Biden administration, and analysis from Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. We wind up the band once again here on Bloomberg TV and radio, starting, as always, with a look at Wall Street. Charlie Pellet has his eyes on the markets at World Headquarters in New York. Charlie?
And good day from New York. Once again, Joe Matthew, we have got the Dow higher, the S&P, NASDAQ, both declining right now, right to the numbers, with the S&P falling 6 points, little change down just about 0.1%. The Dow's advancing 60 up 0.1%, while the NASDAQ Composite Index right now down 102 points for NASDAQ, a decline of 0.5%. A slide in several big tech names, dragging stocks down ahead of earnings tomorrow out of both Alphabet and also from Tesla. Our Mag 7 index ahead of those reports down 0.8%. The 10-year 4.33%, the 2-year 3.82%, and the 30-year 4.89%. Gold surging 1%, 34.32 the ounce on the precious metal. A retreat for crude. West Texas Intermediate down 1.4%, 66.25 a barrel, and Bitcoin up 1.5%. Bitcoin right now at $118,000, just about 118,600 on Bitcoin. So the bottom line here, stocks lower, S&P slumping by 0.1%. We're keeping an eye on coal shares. Coal's rocketing higher right now. Coal's up by 34.5%. The department store chain, but it is the newest meme stock amid an influx of mentions by retail traders on social media. Again, bears repeating, coal shares surging 34%. Yesterday, we saw Open Door Technologies jumping 42%. Today, Open Door just about unchanged on the day. Recapping, S&P down 5, drop there of 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you so much. We're be having our conversation with Ann Neuberger, the former Deputy National Security Advisor for Cyber in the Biden administration, coming up on this eve of AI Day at the White House. AI Week is actually how the administration is framing it. But we have a lot to get to before then. The president today with trade on the agenda, sitting down with the president of the Philippines, Ferdinand Marcos Jr., inside the White House right now, knowing, of course, that Donald Trump has threatened a 20% tariff against our ally in the South Pacific. The president speaking a short time ago with reporters alongside President Marcos in the Oval Office. Listen.
Well, it's tough. He's a very tough negotiator. So far, we're not there because he's negotiating too tough. In fact, I used to like him better than I do now. He's too tough. But we'll probably agree to something. But he's strong, a strong negotiator. He loves your country.
We'll see if a trade deal emerges here. They're meeting right now, in fact, over lunch following the bilateral meeting in the presence of the White House press corps. Bloomberg's Tyler Kendall is with me right now in Washington, having watched what turned out to be, Tyler, a roughly half-hour news conference, a briefing, if you will, a bit of a weave with President Trump here through a series of issues, from trade, we didn't spend too much time on that, to Jay Powell, to, in fact, the Russia investigation dating back to the 2016 election. The real news today, though, has to do with tariffs. What could come of this?
Right, exactly, Joe. I mean, we have to put into context here that we did see the Philippines receive one of those long-awaited trade letters, and they actually saw their tariff rate go up. You said it there, they're facing a 20% levy on so-called Liberation Day. They were facing a 17% levy. So it didn't appear that negotiations were really going in their favor. And of course, this is actually one of the first visits, the first visit of a head of state from the Association of Southeast Asian Nations, ASEAN. And that's important because these were really countries that were prioritized in these trade talks, but that we really haven't seen much movement when it comes to any sort of framework deal being announced. Now, the Philippines does run about a $5 billion trade surplus with the U.S. The U.S. is on the deficit end, so this is something that the administration is definitely looking to try to advance and move forward. But why these nations were really prioritized has to do with China, which of course also came in to the conversation today. We heard President Trump saying that perhaps he will visit China in the not so distant future, and he also confirmed that they have started to see, or rather he suggested that those export licenses related to rare earth minerals and magnets have started to speed up. And we know that that's something that we watch really closely because that's really been at the crux of the negotiations with Beijing.
Interesting language, very Trumpian. We're going to have a very good relationship, he said. the country, referring to the Philippines, was maybe tilting toward China. He said, we're untilting it. And you wonder what kind of details we might get following this meeting today. But he talked about a lot more than trade. He got into the matter involving Jay Powell, and I should be clear, he was asked about this by a reporter. This was the first thing that came up when this went to Q&A following their opening remarks, having heard the president, of course, threaten to fire Jay Powell. Listen to what he said today.
I think he's done a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out. But he's, I call him too late. He's too late all the time. He should have lowered interest rates many times. Europe lowered their rate 10 times. We lowered ours none. And it's causing a problem for people that want to buy a home. Look, our economy is so strong now, we're blowing through everything. We're setting records. You know that. You see that. And whether it's the Philippines or anyone else, we're setting records at levels that nobody's ever seen before. But you know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high, and probably doing it for political reasons.
Interesting, though. It sounds like he's going to let Jay Powell run out the clock, and it follows the comments we heard from the Treasury Secretary earlier, kind of tamping down this idea that Jay Powell should resign.
Right. The question seems to be here in Washington is, are they trying to build up the momentum to fire Jay Powell or to force perhaps a resignation? And you're exactly right. He did say that he's going to let him perhaps run out the term, alluding to May of 2026 when Jay Powell would be up as Fed chair. But he also touched on the recent renovations of the Federal Reserve, saying that he wants this to be looked into. We had Bill Pulte on the program last week who said he's confident that there's going to be a congressional investigation into this. We had Lisa McClain yesterday tell you and me on Balance of Power that she doesn't want to get ahead of anything, but she didn't rule it out that lawmakers would ultimately look into what has been cost overruns at the Federal Reserve, though the Fed, of course, says that everything is in order. They've only been truthful in their testimony about these renovations. But it is interesting because they seem to be walking the line here at the administration. You have Scott Bessent, of course, as you alluded to, saying that at the moment he doesn't see there is a need for Powell to be gone, though he would like to see these lower interest rates. But they're starting to talk about this idea of mission creep. And that really seems to be where the administration is focusing their rhetoric at the moment.
Really interesting. Tyler, just quickly before you leave us, we're going to have AI on the menu for tomorrow. This is the big plan that we've been waiting for, the blueprint, if you will, from the administration that has little to do with restrictions and a lot to do with energy. What are we going to learn?
Right, exactly. And this is something that we've been expecting from the administration. I was at the AI Innovation Summit last week in Pittsburgh, where President Trump really tried to tout that the U.S. is trying to keep this edge when it comes to China. Now, we are expecting him to announce perhaps these policy guidelines around artificial intelligence that would really have to do with easing regulation, but also expanding the energy resources. And that was a big theme that we heard last week as we had the CEOs from Exxon and Chevron sort of descend on this policy summit to make the case that there does need to be more energy production in the United States. I can tell you from the experts that I have spoken to, including the U.S. Energy Secretary, that they're really going to need a holistic approach because there is just so much demand. And that does open up the door for other sources of energy, whether that be alternative energies or nuclear, for example. That's one that we keep hearing about when it comes to production in the United States.
Following your conversation last week with the CEO at CoreWeave, it makes you realize how many of these deals are emerging, Tyler. Thank you so much. Reporting for Bloomberg at the White House, Tyler Kendall with us in person today in Washington, D.C. This is the story that we wanted to get to with Ann Neuberger because it's going to be something that we talk about a lot tomorrow. It's actually getting a lot of talk today. Sam Altman, OpenAI, is in town speaking at a Federal Reserve event. In fact, you can see that live on Bloomberg TV and on YouTube. He's in the process of speaking right now about what could be, and I think we can all agree, the most important technological trend before us. Ann Neuberger was tasked with gauging the risks and potential benefits of artificial intelligence when she worked in the Biden administration as the Deputy National Security Advisor for Cyber and Emerging Technology, and is now Payne Distinguished Lecturer at Stanford University, and with us live on Bloomberg TV and radio. Ann Neuberger, welcome back. You've heard the way this is being framed. I know we'll get the official document tomorrow, but the idea of not bringing guardrails, adding guardrails to AI, but tearing them off seems to be the approach the White House is taking, going so far reportedly to actually penalize states when it comes to funding if they add their own restrictions. Is this the direction we should be taking, or one that scares you, frankly, about the future of artificial intelligence?
Thanks, Joe. It's good to be here with you. The discussion has always been about responsible innovation, and I think what we'll expect tomorrow is some efforts to reduce regulation, largely as noted around electricity, accelerating permitting, since the United States does need a great deal more of new plants in order to power large models that are core to artificial intelligence, as well as efforts to accelerate private sector innovation and potentially use tools like government financing tools to help the U.S. compete with China in deploying AI, particularly in developing countries.
Well, it doesn't sound like you're worried at all then. Is this the approach we need to hasten America's place in this development? Because AI is either going to go, they say, to America or China. And there's been a very careful approach, certainly was in the prior administration, for fear of the impact that AI could have on competing technologies, on the job market, on the overall economy.
So my own view is that the risk and the opportunity in AI is actually in deployment, and where we take the power of large language models and apply them in manufacturing, in robotics, in education. That brings a great deal of opportunity, accelerating innovation. It also brings some level of risk. For example, in cyber, the opportunity to use models to find vulnerabilities, either to exploit them or, on the positive side, to find them in order to fix them. So I think the key will be, as the Trump administration takes steps to promote innovation, that we also ensure that the organizations that are deploying AI are thinking carefully about what are the related risks, whether that's to actual operations, whether that's to decisions that are given to AI models, and ensure that they understand how models are used, they're explainable, they keep humans in the loop on key decisions, and they're really continuously reassessing the risks of those deployments. But there's a lot of promise in AI, and I think it's exciting to see these steps that will do things like enable the United States to compete in building more power plants, in accelerating permitting, or potentially helping companies around the world with government financing to ensure that as deployments of AI happen in countries around the world, it's happening on U.S. artificial intelligence rails, using our models and our infrastructure to promote this next stage of innovation.
Well, you sound a lot like Jensen Huang and a little bit like the White House in this case. And the idea to promote open source, this is what we're going to hear tomorrow, and open weight AI development and, quote, export American AI technologies through full stack deployment packages, almost like what you just said. What are the national security implications of this, knowing that the White House just recently loosened export controls on NVIDIA's H20 and a different chip, competing chip from AMD in China? If we're talking about full stack deployment packages around the world, what does that mean for countries like China?
The national security risks really are that AI powers military and intelligence applications. And in the competition between the U.S. and China on the global stage, we want to ensure that U.S. technologies are not being used by China to promote its intelligence and military advancements. And that's the key. That was the thinking behind export controls, to ensure that the highest end chips that are produced by the United States are not made available to China. And that is the core concern that we have in the area of national security. There are secondary concerns in the area of how does AI models in the hands not only of China, but of adversaries around the world, transnational terrorist criminals, accelerate cyber attacks, potentially accelerate advancements in bioweapons. Those are a broader set of concerns, and that's why it's so important that the companies generating AI models ensure that there are controls, and that's the reason why government is maintaining a careful eye on advancements in models, on the controls that are built in models, and also considering how we would defend against potential advancements in those areas.
Do you trust this administration to guide the way on this technology a day after President Trump posted an AI video of Barack Obama being arrested in the Oval Office?
There are many parties that have a key role in ensuring that AI is used responsibly. The government has that role, governments around the world. Most importantly, and not most important, but I would say very importantly, private sector that is generating these models or deploying these models. They're partners in assessing them carefully and in ensuring guardrails are built in as models are used. When we come to U.S. leadership in chips, that's clearly a national security goal for the United States. But I would note that chips is one part of global leadership. It's also who's using our models, because values are baked into models, and we want to ensure that those American values are built in as countries around the world, as companies around the world begin deploying AI.
As we spend time with Ann Neuberger, I have to bring up what's going on at Microsoft. Ann, this is something the company is actively now naming two groups supported by the Chinese government. It is accusing of hacking its technology, state-sponsored hackers using flaws in its SharePoint document management software, and a hacking campaign that has gone on for some time now. And I wonder your thoughts on this blog post that not only identifies China, but the specific groups within.
This is a deeply, deeply concerning vulnerability in hack. SharePoint is a widely used application. I'll note there's two versions. One, enterprises manage themselves, one managed by Microsoft in the cloud. This vulnerability only applies to those managed by companies themselves. But because SharePoint is so widely used, we can expect likely a fair number of victims. And the vulnerability is a major one. So attackers can not only steal data, they're stealing keys. And when they steal keys, think about physical keys in our own homes, that means they can get back in unless keys are changed, and they can maintain access unless organizations do a fair amount of work to not only patch, but to ensure new keys are being used. So a very concerning hack at this moment in time, and a very concerning vulnerability as well.
Well, you wonder what the government role here should be, and by that I mean our government. In a statement, the Chinese embassy said China firmly opposes all forms of cyber attacks. Quote, at the same time, we also firmly oppose smearing others without solid evidence, unquote. We'll remind everyone that the budget put forth by the Trump administration, in fact, would cut almost $500 million, nearly 30% of positions at the Cybersecurity and Infrastructure Security Agency. Is this an administration that's equipped to deal with China in this way?
You know, exactly as you said, Joe, there's a role for government, and it's concerning. It's very concerning to see cuts in the government's cybersecurity mission, because this is a time when our infrastructure, our power, our pipelines, our water all run on digital infrastructure. And in many cases, that digital infrastructure is not secure enough to deal with threats by countries and criminals. But as a partner to government, there's also a role for the private sector. And I think there's real questions to be asked about how Microsoft is using AI to find and fix vulnerabilities in its products. You know, you may have seen just recently, Google announced Big Sleep, a partnership between their cybersecurity and their AI arm within Google that found and fixed a very significant exploit. And I think we should really be expecting tech companies to start using AI not only to generate more secure software, but to look back at their enterprise of products, find and fix those vulnerabilities, because our digital infrastructure needs to be a lot more secure than it is for the reasons you just noted, countries like China and criminals as well.
That's a pretty compelling use case, Ann. I'm really glad you could join us today. Ann Neuberger, Payne Distinguished Lecturer, Stanford University, former Biden administration, cyber. It's great to hear your insights today. We should note that Microsoft shares are a bit lower today, but still trading just below their all-time high, above $500. This is...
7:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index now trading a little changed on the day. It is down 1 point. The Dow higher by 103, up 0.2%. Both NASDAQ and the NASDAQ 100 index are retreating from records. A slide in several big techs, dragging stocks down ahead of the start of a high-stake earnings season. Tomorrow we'll be hearing from Tesla and Alphabet. Meanwhile, Microsoft is accusing Chinese hackers of exploiting vulnerabilities in its SharePoint software that have led to breaches worldwide. 10-year 4.33%, the 2-year 3.82%. Spot gold up $31 the ounce, gold up 0.9%, and West Texas Intermediate crude down 1.4%, $66.25 for a barrel of WTI. Coming up after the close of trading today, we will be hearing from both Texas Instruments and Capital One Financial. Coca-Cola after earnings down 0.8%. Coke, though, is confirming it plans to launch a new Coke product for American consumers made with American cane sugar this fall. The announcement came less than a week after President Trump said in a Truth Social post that the company agreed to use cane sugar in Coke beverages sold in the U.S. Again, Coca-Cola down by 0.8%. Rival PepsiCo up 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. I just like the glass bottles. When you put the cane sugar and, the Mexican Coke with the glass bottles, I think that makes it taste better. That's just me. Charlie Pellet will have another update on the markets a bit later on this hour as we talk politics here in Washington. What is there to talk about? President Trump in the West Wing today with the president of the Philippines. We are standing by for news, if we get it, on trade with a threatened 20% tariff against the Philippines. They are talking about that now. On Capitol Hill, it's a whole different ballgame. And by the way, we brought you a news conference a bit earlier with President Trump in the Oval. He was asked about Jeffrey Epstein. He talked about a lot of different things, from Jay Powell to Barack Obama, who he claims was a traitor for the Russia hoax, in his words, trying to change the topic here on the Daily Question about Jeffrey Epstein. I don't come here to talk about the Epstein files every day, but it's been impossible to hide from it. Case in point, what's happening in the House of Representatives. All work has basically stopped on legislation this week. There were going to be some votes on immigration and environmental related bills. They are not going to happen after Democrats tried to force a vote on the release of the Epstein files in the Rules Committee last night. The whole thing broke down. We're in a world now where we could see lawmakers going home as early as tomorrow in the House following what took place in Rules. But let's be honest. Long before we started talking Jeffrey Epstein in the last couple of days here in Washington, D.C., the last couple of weeks, there was a crisis of trust on Capitol Hill following what Republicans put together in the president's big, beautiful bill, then a rescissions package that clawed back congressionally approved funding. Something that we talked about with Congresswoman Becca Balin. The Democrat from Vermont joined us on the late edition of Balance of Power last evening. When we talk about the idea of a potential government shutdown, remember what the Congresswoman said. Let's listen.
Why should we negotiate in good faith? Why should we come together and do that hard work of coming to an agreement if in the end the agreement will not be honored? And that's what I've seen for my entire term in Congress now. This is my third year in Congress. Every single time we have an agreement, a top line agreement, it is only as good as, the words on the paper, because they do not honor it. So, of course, we have to look at playing hardball, because they break the rules and then they expect us as Democrats to continue to play by those rules.
Of course, we have to look at playing hardball, she said. I had just asked the Congresswoman if she was prepared to vote to shut down the government when the funding deadline hits on September 30th. Let's assemble our panel for their take on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick, our Republican strategist and partner at Stone Court Capital. Jeannie, is she channeling you when you listen to Congresswoman Balint in that case? And will Democrats vote to shut down the government?
We are hearing, and by the way, it was a great conversation with her, and you had back-to-back representatives last night, so we heard both sides, which was so wonderful. And I think she is channeling what we are hearing from Democrats more broadly. We heard the same thing from Brendan Boyle, the top Democrat on the Budget Committee, who said, how can we be expected to negotiate when we negotiate and then 2 weeks later they claw back the funding? And I think that is a story everybody can understand. If Republicans don't want to work in a bipartisan fashion, and we heard from Russ Vogt, they do not, then they will have to pass the budget as best they can by themselves. And that's something I think we're going to hear from a unified Democratic caucus as we go forward, unless, of course, Republicans decide to deal fairly with their counterparts.
Well, it does feel like things are frozen at the moment here, Rick. I don't know your thoughts on what took place in the House of Representatives last evening. We've talked about the rescissions package before, but this feels like we're in a more, if even possible, a more dysfunctional place than we were before. If Democrats continue to threaten a vote on Jeffrey Epstein files, can they get anything done?
Yeah, look, they're going to be gone. Nothing's going to happen in the House of Representatives for the balance of the summer, and that's probably a good thing. We need a reset to the politics that exists on Capitol Hill today. Right now, the future is pretty glooming, as you've pointed out. Why should Democrats cooperate with Republicans when Republicans are only going to break their commitments and come back after the funds that they both jointly, in a bipartisan way, agreed to pass? It is amazing that the rescissions package, $9 billion, has created this big a stink when Congress just passed $4 trillion of debt as a part of the reconciliation bill. That should be what people are fuming about, not $9 billion rescission package. And I think Democrats would be on much better ground to say that we have just run up a deficit the likes of which no other president has ever done. I mean, I guess I missed the point that the rescission package of $9 billion, which is a rounding error on that deficit, is somehow going to make a big difference politically to the Democrats. But so be it. I don't give advice to Democrats, and they're on their own. Yeah. But it does look pretty gloomy when it comes to whether or not there can be a bipartisan budget that gets approved by the end of September.
So it sounds like we're cruising for a shutdown. It's not even August yet. It's about the principle here, right, Jeannie? It could be $1. The fact that it was approved, signed into law, this is why Democrats are angry. Am I wrong?
Well, absolutely. I mean, anybody who has negotiated anything knows that what is the point if the other side is going to negotiate and then a couple hours later pull back on what you've agreed to fairly? And I would just say that we are going to hear an awful lot, by the way, about the debt and deficit from the Democrats. There was a really important op-ed in the Times by James Carville, and he is speaking for many Democrats when he says the 2026 election should be run on one thing, and that is repeal the big, beautiful bill, or what they describe as the big, ugly bill. And one of the main reasons is Medicare, Medicaid. One reason is the food SNAP and other pullbacks on that. But a big reason is the debt and deficit. And so I think Democrats are going to do both. They are going to continue to ask to be treated fairly and for bipartisan negotiations with Republicans, and they are going to push for a repeal for this bill because the bill is regressive and it hits the working and the lower class harder in the interest of tax breaks for the wealthy.
Rick Davis, where's this Epstein going in the House of Representatives? Because it appears the House Oversight Committee is going to get involved here. And this is an interesting headline today. Tim Burchett, who's joined us on the program before, is responsible for this. The Oversight Committee will subpoena imprisoned Epstein associate Ghislaine Maxwell to testify before Congress. Burchett says he did not consult President Trump beforehand. He's got the support of the committee chair, James Comer, who also says he did not compare notes or speak with Trump or the Speaker of the House about this. This story's not going away anytime soon. What would testimony like this bring to this whole scandal?
Oh, I mean, you really have to wonder. I mean, why in the world would the Attorney General say that all efforts have been made to discover the truth about Jeffrey Epstein's, but Ghislaine Maxwell wasn't ever talked to? I mean, really? she's sitting just a few miles away from you. Now, evidently, according to the reporting I've seen, even the Attorney General wants to have a little tete-a-tete with Maxwell. So my guess is we may be right into this after Labor Day, where the theatrics of the House of Representatives, thank goodness they're there for entertainment value alone, are going to plunge deeply into this issue of Jeffrey Epstein and just keep it alive a little bit longer. But there are a lot of Republicans scratching their head wondering, is it every man for himself today? What's the Attorney General going to do? Cut a deal with Maxwell not to testify to the House? I mean, this is going to be an interesting August.
Well, you got that right. Boy, just when you thought the dog days of summer were arriving. We just got a readout, guys, on the president's meeting with President Marcos of the Philippines. President Trump writing, it was a beautiful visit. We concluded our trade deal, whereby the Philippines, he writes, is going open market with the United States and zero tariffs. The Philippines will pay a 19% tariff. In addition, we will work together militarily, remembering that the president had threatened a 20% tariff in the trade letter that went out. So, Jeannie, President Marcos just saved himself 1%. Do we call this a trade deal?
I don't know if that's what he came for. It seems to be that's what he's leaving with. It'll be really curious, and I have not seen this readout. It'll be really curious to see what the President Marcos side has to say about this. But my gosh, you go in with 20 and come out with 19. I think the president has won this round, but unfortunately, it is the American public that will pay that 19%, not the Philippines. And that's something that needs to be underscored repeatedly. This is a tax on the American consumer should they buy anything from the Philippines.
The Philippines will pay a 19% tariff, he writes, the United States, zero. Maybe, Rick, you're more concerned with the next line here. We will work together militarily. How important is that when it comes to China?
Look, I think it's critical. Philippines has always been a strategic partner of ours for many years. We've had ups and downs with the island. We got kicked out of Subic and Clark Base in the early 80s, and we've now been able to resurrect that military relationship. But, look, I mean, you do wonder, the Philippines are in a position to give blood and treasure to our effort to contain China aggression in the South China Sea. They've been harassed and shot at by the Chinese, and yet we're going to slap them with a 19% tariff. I really wonder what the symmetry of all this policy is, because sometimes it doesn't make any sense.
Rick Davis and Jeannie Sheehan Zaino with breaking news in the clutch here from the White House following the president's meeting with the Philippine president. Many thanks to both of you. Of course, Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino. We're going to have more on this, the emerging details on this deal here in a conversation ahead with Doug Redeker, who's going to join us in studio just a couple of moments from now. We'll also check the markets with Charlie Pellet to see if there's a Wall Street reaction here. There hasn't been too much Wall Street concern over the matter of tariffs now for weeks as we head for an August 1st deadline on reciprocal tariffs. Right now, the Dow's ahead by 138. S&P 500 is up 5. The NASDAQ remains lower. It's down about 65 points right now. Much more ahead here on Balance of Power, only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. As we heard moments ago from our Joe Matthew, President Trump says the U.S. has reached a trade deal with the Philippines, reducing the tariff rate on the country's exports from 20% to 19%, the latest agreement ahead of an August 1st deadline. The president announced the deal shortly after meeting with Philippines President Ferdinand Marcos Jr. Stocks higher, little change right now on the S&P 500 index, but in the green, turning around since our last update. The S&P now at 6307, up 1 point. We've got the Dow up 114, up by about 0.3%. While NASDAQ does remain lower ahead of earnings tomorrow from both Tesla and Alphabet. NASDAQ down now by 72, drop there of 0.3%. NASDAQ 100 index down 0.4%, and the Bloomberg Mag 7 index down 0.4%. The 10-year 4.33%, the 2-year 3.82%. Gold up $31 the ounce, up 0.9%, 34.28. While West Texas Intermediate crude oil is down 1.3%. WTI 66.35 a barrel. Bitcoin meanwhile up 1.9%, just above $119,000. AstraZeneca plans to invest $50 billion in the U.S. before 2030, becoming the latest European pharma company to ratchet up spending in the U.S. ahead of potential tariffs on imported medicines. AstraZeneca shares, they're advancing by just about 2.9%. Again, repeating our top story at this hour, President Trump says the U.S. has reached a trade deal with the Philippines. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet, many thanks. Live from New York, Charlie Pellet watching Wall Street for us here. You wouldn't think there was a trade deadline a week and a half away, remembering, of course, how the markets behaved following President Trump's Liberation Day. But we do have news on the trade front. President Trump meeting today with the president of the Philippines. President Marcos was in the Oval Office. There was a half-hour back and forth with the White House press corps. And when they went back behind closed doors, they did strike a trade deal, according to President Trump, who says the Philippines will go open market with the United States and zero tariffs. I'm reading his language here. Quote, the Philippines will pay a 19% tariff. The United States will pay zero. He says, in addition, we will work together militarily. It was a great honor to be with the president. This was a pretty short meeting. They spoke with reporters for about a half hour, met for roughly an hour, and the president just posted this a short time ago. We're joined in studio now by Doug Redeker, ahead of this August 1st deadline. It's a conversation that we've been looking forward to. Founder, managing partner, International Capital Strategies, a former member of the executive board on the International Monetary Fund. Doug, it's great to see you. Welcome back to Bloomberg TV and radio.
Thanks, you.
So I guess we'll call this a deal. We don't have much more than what we're seeing in this brief post from the president here. There have been a number of framework agreements, which might be the way that you describe this. But with all the noise in Washington today, this is the closest thing we have to a bit of news. This is a market that has been very forgiving to this president. Do you expect further deals to emerge?
First of all, we have to put deals in quotes.
Okay,
because as you said, a deal is a framework, and a framework is still an undefined set of agreements that is not entirely, even the UK deal is not entirely bedded down. So let's be careful how we expect to see things until they're in writing, until you have a tariff schedule that is sent to a customs officer who reads across and says, this product gets this tariff. We actually don't know what's in these things. Do I expect more deals? Deals in that amorphous sense, maybe kind of sort of yes. Yeah. But I'm very worried that the markets broadly have just become overly complacent, overly sanguine, either because they don't really fully appreciate the impact that is forthcoming, or because they go back to the taco trade and they think, well, Trump's going to back down in a matter of days anyway, therefore let's just go on our August break. I'm just not sure that's going to be a great strategy, at least in the short term.
That's a pretty risky proposition if it's one or the other here. We've got markets that are knocking on all-time highs on a daily basis here. You seem to suggest we could be in for a reckoning.
Well, I think the economy, I mean, I'm not going to say the economy is not strong. The economy is doing fine. However, that's in part because of these artificial postponements of the impacts of tariffs that have basically made sure that the impacts of those tariffs are not being felt.
Yeah.
If everybody assumes that you're going to kick the can down the road on tariffs forever, then fine. Then the floodgates of growth and modest impacts are for as far as the eye can see. But I'm a little more skeptical that this is all sustainable when you've got big countries, Japan, the EU, that are Canada and Mexico, where these are the U.S.'s largest trading partners. And it is not clear there's going to be a deal, and if there is a deal, that deal is sustainable.
Yes.
So I'm very anxious that people haven't fully digested what could be coming.
Well, it's coming out in the wash here a little bit in earnings reporting season. Some of these conference calls this week, Doug, have been really interesting. Lockheed Martin today pointing to the cost of steel when it comes to making missiles. General Motors, similar situation. In fact, we heard from Paul Jacobson earlier today. He's the CFO at General Motors about the supply chain pinch that this has been creating. This is from earlier today on Bloomberg TV and radio. Let's listen.
Since COVID, we've been looking at creating more resiliency in the supply chain, and we've onshored a lot of things, as we mentioned in our last call. Only about 3% of our direct purchases come from China through the supply chain, so that's helped us a little bit in terms of being proactive on that. Obviously, we'll do some resetting in partnership with our supply chain partners, but it really starts with our manufacturing footprint.
Resetting in partnership with our supply chain partners. That's real. That's different than waving tariff letters around here. When you hear a company like General Motors talking like that, what does that tell you about the evolution our economy could be about to go through?
Well, it says take notice and pay attention. And while the auto sector is particularly exposed, they're getting it on autos themselves, on auto parts, on steel, on aluminum. The auto guys are really in the crosshairs. But I think I'm not saying it's a canary in the coal mine, but certainly we should be taking it very seriously. That, as I said earlier, the impact of these tariffs across supply chains, across economies, across trading patterns is just not being fully appreciated, in part because companies have gone to great extremes, tamp it down, not only under political pressure, but under the risk/opportunity that these tariffs will be reversed by the Supreme Court ultimately, if not the interim courts along the way. So they're saying, well, let's try and keep things as stable as we can until we're forced. But there will be a point at which they might be forced.
Well, and that's pretty interesting here when you consider the possibilities that what you just described has given the administration cover to say tariffs are not inflationary. Look at the data. You guys have been talking about it for months and we don't see it yet, but we of course know that it's been spread around. It has been shared by companies and in some cases has yet to hit the hard data. When do you see that happening?
Well,
there have been some cracks already.
A lot of companies front-loaded. Yep. And we don't know exactly when that's going to run out, but it's inevitable that it's going to run out. So I can't say what the date certain will be where actually you start to see a spike in inflation because these new orders have to replace the stockpiles that are being drawn down. But I do want to go back to one point, which is the snatching defeat from the jaws of victory, which is I think President Trump did a spectacular job in basically getting everyone to accept the baseline 10% tariff, which 6 months ago we all said nobody's going to accept a baseline 10% tariff. Suddenly, whether it was the EU or others, said we will accept the 10% tariff. And if you just look at it from a budget deficit reduction standpoint, that's $280, $300 billion of additional revenue. There's a lot of upside to Trump's own agenda.
Listen to you.
What did he do? He extrapolated a linear, if nothing bad is happening at 10, then nothing bad will happen at 20. And so now he's just overplaying his hand. So whether it's the EU or others, they're all saying, we swallowed hard. We were willing to accept something we didn't want to accept. Now, you're at risk of overplaying your hand. That's what worries me, because then you've got the risk of no deal or tariffs that are so inflationary and disruptive that it does have a serious impact on the economy.
I want to ask you about Jay Powell while you're still with us, because if the market's whistling past the graveyard on tariffs, you could argue the same when it comes to Powell. Then again, we heard from the president earlier today, and it doesn't sound like he has any intention of firing him or even forcing him to step down. He says, we'll give it the next 8 months. It's not that long anyway. Is this even a story?
Well, it's a story because the markets focus on it. Yeah. But I don't think the markets are wrong to somewhat take the president's words today, at least, that he's not planning to fire Chair Powell before the end of his term. I think taking that at face value is probably a good bet. I think that obviously Trump is trying to jawbone Chair Powell and the FOMC into, bending to his wishes. I don't think that they are susceptible to that. But I think the markets, while they clearly get excited whenever there's a talk about changing the Fed chair for good reason, I think they're probably correct in tamping down the expectations that Trump is going to pull the trigger. I'd throw in one political observation, which is if something else happens, something unrelated to the Fed, and President Trump needs to change the narrative, he is prone to doing something which will absorb all of our eyes on new headlines. And one of those possibilities could be the so-called wag the dollar scenario, which is you threaten, if not pull the trigger on firing Chair Powell in order to distract attention from something else that you really want people not to focus on.
Not that there's anything like that around here these days. Doug, I've been looking forward to seeing it. I appreciate your coming in. Doug Redeker, International Capital Strategy, is with us live in Washington here on Bloomberg TV and radio. All the talk of Jay Powell, we should mention the fact that there's an important Fed conference taking place across town. Jay Powell, in fact, addressed that group earlier today, did not talk about his tenure at the Fed. Let's listen to the Fed chair from earlier.
We need to ensure that all the different pieces of the capital framework work together effectively. Doing so will help maintain a safe, sound, and efficient banking system for the benefit of the people we serve.
That was at the Integrated Review of the Capital Framework for Large Banks conference. I don't know how they come up with the names of these things, but Bloomberg's own Katanga Johnson has been spending the day there and joins us now live from the site in Washington, D.C. Katanga, it's great to see you. Sam Altman, another bold-face, speaking earlier today at this event. What's the purpose of bringing in the face of AI to speak around Jay Powell today at the Fed?
The organizers today are really keen to discuss all the intricacies of capital, but to take a break from that deep discussion, the Fed did invite OpenAI CEO Sam Altman to discuss more broadly what the impacts of the banking system of financial services might be if regulators could get the balance right of capital requirements, but also open relationships with whether it's OpenAI, and he even said, or his competitors, to really address issues like potential fraud, potential underwriting, and other use cases for AI in this imaginative future he described.
Interesting. We didn't learn, as I mentioned, anything about the tenure surrounding Jay Powell on a day that President Trump spoke about the Fed chair again and suggested he let him finish out his term. But it's also an important day for the Vice Chair of Supervision, Mickey Bowman, also at this event. Katanga, what did we learn from her?
That's right. Bowman did think through beginning her term with a conference that brought together academics, advocates, and the industry to discuss not whether necessarily capital should be raised or lowered, though the direction of travel might be lowering capital requirements, but really to have a conversation that informed rulemaking before the rules are written, to invite comment from a broad range of participants so that once the rule writing team gets the pen, they can actually consider what it might look like to have a broad range of impacts earlier on. It's interesting, in part, Bowman really was a critical voice of the previous Vice Chair for Supervision, Michael Barr, under President Biden. And for her, beginning her tenure with a more transparent process of rule writing and really seeing what the relationship of different rules are on one another and for the American public is how she wants to make her mark in this role.
Really interesting. Just in our remaining 30 seconds here, Katanga, was the mood in the room any different than it would have been a couple of months ago with all the talk of Jay Powell being fired or stepping down, the talk of renovations going over budget? Was any of this hanging over the event?
You know, Powell was in the room, and I saw him engaging with a number of participants. No one that I've spoken to privately or publicly have discussed Powell in the job. People are really focused on, well, what are the rules going to look like regardless of who's in the chair? Yes, the mood of the room is a little different than it might have been before the heated tensions between the White House and Chair Powell. But the bankers and advocates and academics, and even Altman himself today, really wanted to think about if we get the rules right, how can we envision a future that really benefits Americans and helps them be on a stronger economic and financial footing?
With us live from the Fed conference, Katanga Johnson. Many thanks, Katanga. It's great to see you, and thanks for bringing that story to us here on Balance of Power. I'll meet you back here on the late edition, 5 p.m. Eastern Time. Balance of Power, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week Daily. Carol Masser, Tim Stenivek. That S&P 500 record run, taking a little bit of a breather today.
Yeah, it is, but, you know, could be coming back because we're off our worst levels of the day. In fact, we were in the green just moments ago. The S&P 500, we can go ahead and call it flat, but lower right now. Charlie Pellet's going to have the details.
It's almost like we're waiting for some big tech earnings.
Yeah,
Are we? Yes,
I think we are. Yeah.
All right, so a lot to come. Hey, we're going to talk about that. I will say a lot of the Mag 7 names we have seen down for most of the day. Our focus this hour is, first of all, Tim, the future of the Fed chair.
Yeah, also the impact of the administration on General Motors and Coca-Cola. Both of those companies reporting results and trading lower.
And possible private credit pitfalls and a tough childhood. We are going to go private with the head of Carlyle Group, CEO Harvey Schwartz. That's all to come in the next 60 minutes. First up, let's get a check on that trade. Here is Charlie Pellet.
I thank you very much indeed. Ahead of big tech earnings tomorrow, Alphabet, Tesla, those are up next. We've got Alphabet shares advancing now by 0.3%. Tesla up by 1%, and the Bloomberg Mag 7 index lower by 0.5%. Right now, the Dow is higher. Dow Industrials up 90 points, gain there of 0.2%. S&P lower, little change, swinging between gains and losses, down a point right now, little change there. The Nasdaq Composite Index down 0.4%. The Nasdaq 100 Index down 0.5%. And again, ahead of big tech earnings tomorrow, the Bloomberg Mag 7 Index down right now by 0.5%. We've got the 10-year 4.33% with a 2-year 3.82%. Spot gold up $32 the ounce, $34.29 now, up 0.9%. While West Texas Intermediate crude is down 1.5%, $66.18 a barrel. Bitcoin, meanwhile, up 1.9%, just above $119,000. Microsoft is accusing Chinese state-sponsored hackers of using flaws in its SharePoint document management software in a hacking campaign that has targeted businesses and government agencies around the world. Microsoft shares today down by just about 0.7%. Kohl's shares are surging up 39%. Minting the department store operator is the newest meme stock amid an influx of mentions by retail traders on social media. And Open Door Technologies, it jumped 42% yesterday. Open Door today, right now, is trading lower, giving back a lot of those gains, down by 14%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Headline crossing the Bloomberg terminal. Synovus Financial, it's a regional bank in the southeastern part of the United States, weighing options, including a potential merger after drawing some interest. This is according to people familiar with the matter. We should point out the stock, no surprise, ticker SNV, it is popping on the news, Tim. It's up about 5%.
Deliberations ongoing. There's no certainty that Synovus will decide to pursue a transaction. The people said a representative for Synovus did not respond to requests for comment. As Carol mentioned, the stock popping on that news.
All right, we'll keep an eye on that one. In the meantime, I want to get to something that is certainly among the most read stories on the Bloomberg on this Tuesday. Kind of asks some questions. Will he or will he not? Should he or shouldn't he? Will they or won't they stop talking about Fed Chair Jay Powell leaving the Fed? The he, of course, is the Fed Chair. The they is President Trump and a few key advisors, including U.S. Treasury Secretary Scott Bessent. Here's what he had to say earlier today on Fox Business.
I know Chair Powell. There's nothing that tells me that he should step down right now. He's been a good public servant. His term ends in May. If he wants to see that through, I think he should. If he wants to leave early, I think he should.
All right, that, of course, was U.S. Treasury Secretary Scott Bessent earlier on Fox Business. We should point to President Trump in the Oval Office just around noon Wall Street time today with the president of Philippines. They were talking about trade, but most of the conversation and certainly questions with reporters dealt on a lot of other topics, including the future of the Fed chair. He, too, talked about the Fed chair, but seemed to say, you know, his term is up soon, so perhaps maybe he will stay in that position. But anyway, there was some commentary from the White House as well. All right, let's get into it because we're kind of trying to figure out what this all means in terms of the pressure on the Fed chair and what it means for monetary policy. Stuart Paul is U.S. economist for Bloomberg Economics, and he joins us here in studio. Stuart, the drumbeat seems to continue and the pressure on Fed chair. First of all, I mean, will Jay Powell do anything different because of it? And might he step down?
I certainly don't think that he's going to step down. I don't think that he's going to do anything different. I think that the major question...
And by anything different, meaning he's going to do what monetary policy. Got it.
I think that he's probably still expecting 2 interest rate cuts this year. He probably still plans on delivering those 2 cuts probably in September and then in December. I think that that's his baseline expectation and what he's hoping to deliver. I think that the bigger question, and hopefully one that someone will ask next Wednesday during the press conference following the FOMC decision, I think that the big question to ask is whether the FOMC members feel compelled to stand pat and, in the face of political pressure, show their independence, assert their independence, and is this political pressure, in fact, making them inclined to wait a little bit longer? If Chairman Powell is intending to cut in September, does the political pressure give him some incentive to assert his authority and wait perhaps a little bit longer? I don't think that he would answer in the affirmative.
You mean one of those, I'm in charge, and
Exactly.
to show you that, I'm going to even hold off even
Exactly.
longer.
The political pressure coming from the West Wing probably has the opposite of the intended effect.
You know, that's so...
That makes it political.
That makes it extremely political. And I think what that reminds us of is the fact that Chair Powell is, yes, the chairman of the Federal Reserve, but he's not the person who sets monetary policy uniformly.
Right.
There's a committee here, and I think one question that I have is why over and over again he seems to be the target of the ire of the president rather than other members of the FOMC.
Well, so as the chairman, he is the most powerful. He attracts the most attention. He's the one whose voice is heard most clearly by financial markets. He's not the most public. As a speaker, of course, you get all the Fed branch presidents. You have Governor Waller just this week speaking publicly, or last week, I guess, on Bloomberg TV and radio. And I think that what's most important is that the chairman is the person who tends to set the tone for the committee, and it's very rare that you get a lot of dissents on the committee. As the chairman sets the direction, as the chairman sets the agenda in terms of policy making and regulatory rule makings, so follows the committee, usually. And the question around the committee will be just how willing are people to dissent from the chairman. And I think that we're going to see a dissent next week with Chris Waller, maybe 2, perhaps even 3 people dissenting.
President Trump, I want to clarify kind of what he exactly said in the White House around 11:43 this morning, Wall Street time. He did say, he was asked about Powell resigning. He's going to be out in 8 months, basically, he said. And he says he's got the rates high probably for political reasons. Based on the economic backdrop, should Fed Chair Jay Powell cut rates? Like, does the economy tell you that, and all the data say that, yep, we do need a rate cut?
Most of the headline figures would suggest no.
Okay.